With valuations where they are, with sentiment as stretched as it is, this is not a market that has a lot of room to absorb bad news when we do get it.
Without financial stability, the Fed can't achieve its goals on inflation.
The expectation is the Fed will certainly signal a much more dovish tone.
This is a Fed that's going to take its time. It's going to measure twice and cut once.
The taper will be announced likely this fall, and by the winter, the Fed will be pulling the trigger on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. Mr. Ferro off writing that book, The Drawdown Meditation, widely acclaimed for spring of next year. Lisa Abramowicz here and Kailey Leinz doing duty this morning. And it is a morning of upgrades. Let's begin with the stock market, Lisa Abramowicz. Christopher Harvey with a complex note on the macro and the model of it all. And he goes up a nice upper single-digit return, not 5,000, but 4,800.
Well, the amazing thing is 4,825 is his new projection, but he was one of the biggest bears on Wall Street, sub 4,000 before this. So basically from bear to one of the biggest bulls on Wall Street at a time when there cannot be fast enough upgrades. The question is, what's underpinning that, Tom, given the fact that we're looking at low yields, we're looking at low growth and a lot of potential risks to the outlook, and the upgrades are coming on the heels of that. The expectation we're going to remain in Goldilocks.
But what's so important here, as you correctly state, he goes from gloom to optimism, high single digits, 7-8% return. It is based, Lisa, not off economics and macro babble, Jackson Hole babble. It's based off earnings.
It's based off earnings. It's based on traditional performance. The fact that after you get returns like the ones we've gotten so far this year, it's very rare to see a drawdown. So John can talk about the drawdown meditation. It's also looking, though, at the idea here, the stock market is not the economy. Companies have been able to pass along higher prices to consumers. They've been able to consolidate market share, and they are doing very well despite some of the potential risks.
And with that, Kailey, is a recovery in oil. Jeffrey Curry making a splash at Goldman Sachs, and now somebody else climbs on board. Brent crude, and the quote right now is 69.52. Brent crude up a number of days here.
Yeah, and UBS thinks we have another $6 or so of upside. They see Brent going to $75 a barrel, Tom, because they see the supply and demand picture actually improving from what the market has feared over the last several weeks. But to the point of upgraded calls, of course, I'm just watching and waiting to see if Savita Submarinian over at Bank of America or Barry Bannister over at Stifel go up from 3,800, because this is a series of strategists now playing catch up to this equity market that is already north of 4,400, which is above the average year-end target for the year. So I feel like more upgrades could be coming, Tom.
Yeah, Lisa, I look at this, and frankly, I haven't done this in a while, folks. You go to WEI on the screen. I learned this function from John Ferro, and it starts with the Dow, Lisa, as it should, and I believe I've got 1 year trailing up 25%, Standard & Poor's up 31%, Nasdaq Composite up 31%. The people that were looking for single-digit cautious, the pendulum of gloom, it just hasn't happened.
Yeah, and part of this is because of some of the stimulus payments that have fueled a lot of consumer purchases and consumer confidence. Part of it is the vaccine. I wonder how much more of a lift they get after the FDA approved the Pfizer-BioNTech vaccine fully yesterday. This was a big shift, and we are starting to see more companies mandate vaccines. President Biden would like to see more of that. You do wonder, how high can we go, Tom, at a time when we do expect to see peak growth and we do expect to see a deceleration going forward?
That's the economics folded in, and Christopher Harvey ignores that this morning. Let me go to the data. We're not going to ignore the data here, and of course, what an up day yesterday. The VIX down through a 17 level. I consider that crucial. It comes back to 17.30, but nevertheless a constructive start to the week. Futures up 6, Dow futures up 20. It's a fractional move. Nasdaq 100 here on the 10th anniversary of Stephen Jobs' resignation from Apple, grievously ill. Nasdaq 100 appropriately leading the way. In the yield space, 1.26 on the 10-year. I'd note 103 on the 2-10 spread. What that indicates, folks, is continued curve flattening and just sort of a stasis in buying bonds. Maybe that's what you get in August. Dollar still above 93 on DXY. Euro 117.33. I'm just doing this because Lisa has to walk around all the wedding presents for Kailey Leinz to get to the wall.
So many gifts. So many gifts.
Don't break the china.
Yeah, although many of the gifts may be virtual because everything else seems to be virtual these days as we count down to a virtual Jackson Hole on Thursday and Friday. 9:30 a.m., another virtual meeting. G7 is going to meet President Biden discussing with his allies, in particular, the situation in Afghanistan. I want to understand the push-pull here in getting out by August 31st. That is the set deadline. However, the Taliban has come out and been pretty cautious with respect to basically saying there will be consequences if you do not exit by then. 10 a.m. U.S. July new home sales and August Richmond Fed Manufacturing Index. Yesterday's existing home sales data came out very strong, stronger than expected. How much do we see that continue in the latest data here for new home sales? And then also, do we start to see those higher input prices crimp manufacturing? I am curious to see that. And 1 p.m., Tom, I'm doing this for you. The U.S. is planning to sell $40 billion of two-year notes, kicking off an active week of sales. This is actually interesting. I'll tell you why. There was a new study that came out that showed that international buyers accounted for the greatest proportion ever of the previous 10-year note reopening. Basically, they are coming out in full force, and the official buyers tend to concentrate in the shorter maturities. This explains perhaps why yields have remained so low despite some of the economic growth and all of these upgrades that we keep seeing from strategists across Wall Street, Tom.
We've seen so many different opinions here, so many different views on the correlation of equities, bonds, currencies, commodities. And on the equity market, for those cautious, there's an absolutely thundering silence. There's no other way to put it. Eric Friedman joins us now with U.S. Bank, their wealth management and CIO, who's kept his eye on the ball, which is what will be the sum of earnings and at what multiple do you price that into the equity market? Eric, what does the gloom crew get wrong?
Really, Tom, the gloom crew is getting wrong the pace of earnings revisions. And that's what you're seeing across the street right now is people just catching up to a better operating environment. So we're at 24 times this year, and we think it's going to get to $200 on the S&P operating level and 23 times 220 for next year. That brings us to 50-60 for the year end of 2022. That puts us firmly in the bullish camp where we've been, and we think Wall Street has to catch up to that rising earnings number.
So is there any way to sense who's going to be the leadership, Eric, going forward? If it isn't big tech, who exactly will drive this rise even further?
Lisa, right now, based on market structure, you're right. Big tech is really the driver just because of the weighting in most indices, but we do think cyclicals still have a bid attached to them in terms of both equity prices as well as earnings revision. So given this gradual recovery, and if anything, not that we want COVID to continue, of course, but as we see this off-on with COVID policies across governments, that actually leads a very gradual glide path of recovery. So if anything, we think this growth could be extended as we continue to deal with the push-pull of COVID. So we think cyclicals will continue to be a place that people have to revise their numbers upward.
Eric, how concerned are you about a hawkish Jackson Hole meeting, especially at a time when so many people are pricing in optimism with the recovery while also counting on the Fed to remain pat?
Well, Lisa, like you, we study the Fed minutes quite closely, and one of the things that really caught our attention was the Fed moved a little bit away from a supply-side focus in their latest commentary about inflation. One of the things they really anchored their viewpoints on is that there's been just a supply chain issue that's really hampered the normal transmission of prices, and that actually changed a bit in their latest minutes released last week. So we do think that if there's more of an emphasis on demand plus the supply constraints the Fed is focused on at Jackson Hole, that could lead us to believe that, the Fed may actually act more quickly. We don't think the Fed's going to act before, let's call it November, December on tapering. We just think they need more information as we delve into the September and October jobs numbers. But again, that optionality may come quicker if we see both supply and demand side concerns from the Fed.
And as for the read-through to the bond market, you say fair value on the U.S. 10-year Treasury yield is 1.52%. We're at 126. So where does that 26 basis points of difference come from?
Yeah, Kailey, I think it's going to be a very, very gradual job owning up by the Fed. And if you look at the pace of change, if you will, going from $120 billion of net purchases a month to something less, we think that's going to very very gradually nudge up the 10-year rate. But if you look at the term structure of interest rates, which Tom touched on earlier, it's still a very gradual increase. In fact, if you look at 2s, 3s, 5s versus 10s and 30s, most people think inflationary pressures dissipate over the next couple of years. So we do think, Kailey, it's going to be a very gradual migration higher, probably because of the Fed at Jackson Hole, plus later this fall has to nudge up inflation expectations. We think the bond market will very gradually follow suit.
Eric, I look at this very quickly here. Your upgrade gets you out on the street. You do it differently. You're not sell side. You're much more of managing wealth money as well. Do you have an upgrade in your head on multiple that where you sustain at 23, 24 times or even a higher multiple?
Yeah, Tom, it's one of those things that if we're looking at a 10-year at 152, let's call it, it pushes north to 175, that may take our multiple down to like 22. But we still think the terminal value, and Tom, you always do a great job of looking at DCF analysis, and that's something we look at quite a bit. We think the terminal value of interest rates is going to be very low for a long period of time. That keeps us at a more elevated multiple, not because we're just hoping that things get better, but because we do think that this is an environment where, again, in this very benign interest rate environment, people will pay up for earnings. So 23, 24 times, we think, is very reasonable in this environment.
Eric Friedman, thank you so much with U.S. Bank Wealth. An extraordinary morning, of course, and we'll go to Washington here in a moment. Anne-Marie Horton will be with us in the 7 o'clock hour as well. This is exceptionally important from John Hudson in the Washington Post. This was published 8 minutes ago, where the CI director of the United States, William J. Burns, hugely esteemed. He's appeared on the show any number of times. Director Burns traveled to Kabul and met with one of the Taliban's de facto leaders, Abdul Ghani Baradar. He has been very much in the news. That is just breaking now, but shows some of the discussions going on. It is a short effort by the Washington Post, but very important note that the CIA traveled to Kabul to meet with the Taliban. Please stay with us on a day of optimism for the markets. Futures up 7. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Vice President Kamala Harris warns that China poses a threat to countries in Asia. At the same time, she reassured countries in the region that the U.S. would not force them to choose between the world's two biggest economies. In a speech in Singapore, Harris spoke about the vision for a region built on rules, human rights, freedom of the seas, and unimpeded commerce. President Biden is being pushed by allies to extend that end of August deadline for American troops to leave Afghanistan. British Prime Minister Boris Johnson and other G7 leaders are expected to press the president on the issue today. Still, the UK warned that the president is unlikely to change his mind. Meanwhile, the Taliban warned that it may take action if the soldiers aren't gone by August the 31st. And New York State has a new governor. Kathy Hochul was sworn in just after midnight, becoming the first woman to serve in that role. Hochul takes over after fellow Democrat Andrew Cuomo resigned over a sex harassment scandal. She has to overcome the shadow of that scandal whilst dealing with New York's sluggish recovery and rising coronavirus rates. And COVID's resurgence has hit airlines from the US to Australia to China. Southwest Airlines blames the Delta variant for a rash of cancelled bookings and a slowdown in demand. Meanwhile, Chinese airlines are offering the fewest seats in 6 months. That bright spot in the industry, Europe, the only place where so-called vaccine passports are used. European carriers are now adding more flights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The question is, are we on track to fulfill our objectives of this operation? To bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk. And we believe we are.
Mr. Sullivan, the U.S. National Security Advisor, seen often in the recent days with perhaps a changing tone as well. It is a movable feast this morning in Afghanistan, 8.5 hours ahead of us. I'm going to call it the 2 o'clock in the afternoon hour in Afghanistan. This crisis continues. Joe Matthew is following this, of course, with sound on. I can't say enough about the radio effort, Kevin Cirilli inventing the program, and Mr. Matthew driving it forward as well. Joe, thank you so much for joining us way too early in your morning. John Hudson changes a debate this morning. The director of the CIA, someone who's appeared with us, the esteemed William Burns, traveled to Kabul and met with that guy. That guy is Baroder. Why is it such a big deal that the CIA director, our most decorated diplomat in the administration, is sitting down with the leader of the Taliban?
Well, it certainly tells us how the world has changed under our feet here, Tom, in Afghanistan. This Baroder was arrested by the CIA years ago. Now we're meeting in the same room. It all has to do with the deadline. And by the way, I will remind you, that is 1 week from today. We have thousands more people to evacuate. And of course, as we've been discussing, there's now a push to extend that deadline. Boris Johnson is apparently going to ask Joe Biden to do that. Maybe he already did. They spoke yesterday. But the virtual G7 today is where this comes to a head. Can we get everybody out? One thing I will mention is that we're getting better at this, Tom. 11,000 people were evacuated in 12 hours' time yesterday. That's the most we've seen yet.
That trend is there, but in your reporting, Joe, on Sound On, and, as well, and Lisa, Joe's working like a 6-hour day. I don't know what it is about Washington.
You mean 6 hours on air?
No, just 6-hour days. Ben Chilidole, he comes back, he does the radio show.
It is August.
Goes home. Joe, seriously, do we know the Taliban now? Because that, to me, is the mystery.
Oh, I don't know that that's true. I think maybe that's part of what's going on in that meeting. I don't think we know what's going on the ground minute by minute either, Tom. This is such a tenuous situation here that we're talking around a lot of stuff that we don't necessarily know about. There's no real-time gauge here. There's no metric or index to let us know what the score is in Afghanistan. Weeks, months from now, we're going to be telling stories about interactions with U.S. forces and thousands of Afghanis and Americans around that airport that'll make your hair curl. They're going to be writing books and movies about this for a long time. I would also revert back to what Liz Cheney said over the weekend. The amount of threat, the amount of risk that these forces are under right now. Imagine what would happen if an American died, if we had a kidnapping, a hostage situation. It would change the entire dynamic that we're discussing here today. That's why you have the CIA director in the same room as the de facto head of the Taliban.
Joe, it's really powerful that we're discussing this and that we're exiting Afghanistan 20 years after 9/11, and we are coming up on that anniversary when we first entered the nation. There is a question of the balance of political pressure at this point to negotiate with a terrorist organization or someone who has been previously recognized as such, a disparate organization, versus trying to enable people to get out of the nation more safely and more quickly, basically to have more visibility. Where is this balance of pressure right now for President Biden?
Well, it depends on who you ask. Jake Sullivan yesterday, who we just saw in that clip telling the briefing room that the U.S. will leave when Joe Biden says so. That doesn't always feel like that when the Taliban is saying, no, we've got a red line here. We want to avoid skirmishes. And the Pentagon is dealing with a lot of different scenarios as to what could happen. One thing that everyone seems to agree on, though, guys, is the closer we get to the 31st, whether this deadline changes or not, the tension is going to rise quite a bit. It's not unlike some of the other debates that we're seeing in Washington right now. When you start inching up on deadlines, things start to happen.
Well, speaking of other debates in Washington, Joe, of course, Nancy Pelosi is going to try again today to break the stalemate on advancing Joe Biden's economic agenda. The moderates are giving her work to do, basically. What is her next step going forward?
Giving her a little bit of heartburn. The irony is not lost on me that Nancy Pelosi is proposing something called the self-executing rule. That, as Steny Hoyer, the majority leader, refers to mutually assured destruction in a family meeting yesterday with the Democrats in the House. They all came back into town, and there was a bit of a stare down, we understand. That family meeting showed some tempers flaring. Some F-bombs were reportedly thrown around. Progressives are very upset with this relatively small group of moderates, now 10, holding this bill essentially hostage. They say they will not vote for the bipartisan infrastructure deal if reconciliation comes first. We added one more lawmaker to that lot yesterday, so 10 moderates. It goes to show how little breathing room Nancy Pelosi has right now with only 3 seats.
Next to none. Joe Matthew, thank you so much. Greatly appreciate it. Important conversation in Washington. Sound on Bloomberg Radio, 5 p.m. Tonight with Mr. Matthew. Lisa, as Joe was talking, there's the headline coming off the Bloomberg. It's featured as a red headline, Iron Ore Rockets, and it's about monetary accommodation.
The idea here, the iron ore jumped at 10%. This is expected support from the People's Bank of China. Remember that yesterday, or actually last night, they vowed to support credit as well as stabilize monetary growth, and this comes after shrinking the credit supply over the past few months. This has been the big question. We had one key rate cut from China that never happens. There always is more than just one. And so how much accommodation are they willing to give an economy as they try to shift to a less credit-focused kind of ecosystem into something more sustainable? The answer is it looks like they're not quite ready to maybe ease off the pump, and this means that there might be more investment than people had previously expected.
Kailey, moonshot in 2 days, 65 to near 70 on Brent crude. It speaks volumes.
Yeah, a huge rebound in the commodity complex broadly, Tom. It's not just iron ore, but with this, I would also note that it's not just about the picture of economic growth and demand in China. The demand also comes from the steel producers, and steel is something that China is cracking down on as it tries to become more green, get to climate neutrality by 2060. China has its work cut out for it, and so the environmental factors that are at play here, other than just broader economic growth, is something that you have to consider with iron. And I wonder, for that reason, how sustainable this rebound is going to be, Tom.
We want to reset this morning, and we do so, folks, 2 days in a row with markets up 7, Dow futures up 36. Abramowicz just sent me a note and said, Tom, it's not about the equity market, it's about bonds. And Lisa, I got to go back to a couple charts I've seen in the last 24 hours. Thank you, Zero Hedge, of the complete separation of credit from equities. It's absolutely stunning. In honor of Raj Gilbert, the hockey stick turn in yield and price versus what's going on in the moonshot in the equity market.
Well, you had seen a little bit of weakening, although, honestly, we didn't talk about this with Eric Friedman. He had so much that he had changed his view, and he actually got bearish on credit at the same time that he upgraded his expectation for the S&P.
How does that happen?
Basically, it is a question of the Federal Reserve. It is a question of how much more they are going to backstop this market. At what point do we look at credit as an indication of corporate health and balance sheet discretion versus something bigger or having to do with just simply monetary policy?
I'm going to go to the Pharaoh rule. This is John Pharaoh, folks. Look for drawdown meditation, the Pharaoh way, coming out spring of next year. Pharaoh says look at a 127 10-year, and it has not moved lower, which gives optimism to the bulls. Futures up 7, Dow futures up 44, 35,325 level on the Dow. Stay with us, much more on radio and television. This is Bloomberg. Bloomberg Savannah's, good morning, everyone. Kailey Leinz in for John Farrow, Lisa Abramowicz, and Tom Keene. Thank you for being with us. The markets better than good. We've got a lift to the markets. Futures up 8, advancing off of yesterday's joy, very different from last week's angst. The VIX 17.22, and I do mention yields 1.27% as well. I guess this is the point where we begin a look back. It's September 11th. There are those that have younger children explaining to their younger children exactly what was September 11th, and to many of us, it is a collective memory. Everyone will pontificate. Only Foreign Affairs gives us wonderful expert opinion across a wonderful cross-section. Who won the war on terror? I really can't say enough about this. Daniel Kurtzfalen joining us, driving on the legacy of all that have done foreign affairs. Folks, an annual subscription, I believe, is a price of an overpriced martini at an overpriced restaurant. Throw it at your offspring and say, shut up and read this. Daniel, congratulations. Ben Rhodes is in there. maybe from conventional Washington, some other people as well. And I'm thrilled to see the Marine Elliot Ackerman in there with Stavridis writing my book of the summer. And Elliot Ackerman makes no bones about it. We are a nation preoccupied. We are a nation in fatigued. How tired is America?
Well, it's appropriate in some ways that we're seeing this messy, chaotic, in many ways tragic withdrawal from Afghanistan right as the 20th anniversary of 9/11 is approaching. As all of us who remember it know, it was such a cataclysmic event for American politics, for American foreign policy, and it really shaped the way we used our power in the world, the way we thought about the rest of the world for so long. And in some ways that had seemed to really drop out of the foreign policy conversation in the last few years in Afghanistan. And what we're seeing now, the scenes from Kabul, are really a reminder of just how much it has changed the world, just how much it has changed the sense of American power and ourselves.
There's so many ways to go here. Stavridis' essay of a few days ago in Time magazine, what Zakaria wrote in the Washington Post, and to me the exhaustion is an exhaustion of theory or belief. In putting this edition together of Foreign Affairs, could you discover a modern American foreign policy theory? Does it exist?
Well, if there's a theory or a tendency, it may be one of overreach and hubris and these kind of maximalist goals that are eventually walked back in time. If you remember back to the days after 9/11 and the declarations coming from President Bush at the time, but from lots of others about the agenda we had in the world and the way we were going to achieve this ultimate victory in the war on terror and transform the Middle East and transform our own society. All of those goals look so fanciful in retrospect. And what we've come out of, if we look back at this period, as you see in these essays, is something that in some ways would be surprising if you go back to the days after 9/11. We haven't seen the kind of mass casualty terrorist attacks in the United States that most people thought would come repeatedly after 9/11. And that in some ways is an achievement, but look at all the costs that have come with it. You see in Elliot Ackerman's essay, the one you mentioned, just how much it has affected American service members and the American military and American power. You see in Ben Rhodes' essay, just how much it has changed American foreign policy. So we can, in some ways, look at certain kinds of achievements and certain kinds of victories of American policy in that period. But if you look at the declarations and ambitions that we had in those days right after 9/11, what we've had to pay for those achievements is really staggering.
And there's also the question of how the concept of the war on terror has changed amid a changing world. What do some of the expert writers weigh in on that front?
Well, one of the most striking things about the Afghanistan withdrawal, which I think is a theme that runs through a lot of these essays. We closed the issue, of course, before we saw what was going to happen this week, but most of the writers really anticipated what this outcome was going to look like, is this moment when the United States is trying to balance goals in the war on terror and the kinds of considerations that drove us into Afghanistan in the first place and that kept us there for 20 years against what are seen as the kind of challenges of our day. China, technology, great power competition. That's what people in the national security and foreign policy worlds are talking about now. But as you see in these essays, the response to the war on terror has shaped even the way we think about some of these great challenges today. So even as it's passed out of the kind of core of American foreign policy concerns in many ways, at least before Afghanistan became the headline story of the day, it really has shaped the way we think about the world and about our own power.
As we discussed this morning, the idea of top-level officials in the United States meeting with Taliban officials, the idea here of the legitimacy of groups previously designated as terrorist organizations, how much are we at risk in the Western world, generally at risk, from terror threats in Afghanistan, where we have that much less visibility on the ground?
That is the big question of the day, and it's one we just don't know. Bill Burns, the CIA director, who, as you alluded to, was meeting with the Taliban leadership in Kabul yesterday, a really extraordinary meeting given the history of these past years. He has said very, very explicitly that we're going to face some more uncertainty and some more risk. But one thing that I really liked in one of the essays that we published by Dan Byman, we talked for a long time about stamping out evil and stamping out terrorism everywhere. And what Dan Byman points out in this essay is that we've come up with what he calls a good enough doctrine, where we accept a degree of risk. We accept that the United States is not going to go out and destroy every terrorist or every terrorist group everywhere, but that we can create enough protections that there should be defenses, at least against the kind of large attacks that we worried about in the aftermath of 9/11. So in the wake of years in which we talked about these grand victories and stamping out evil and all of that really grand, ambitious rhetoric, we're settling for something much murkier, and there will be a degree of risk and uncertainty as part of that.
And Dan, I saw Emma Ashford's essay on strategies of restraint as kind of an extension of that. I mean, 20 years post 9/11, once we're out of both Afghanistan and, of course, been out of Iraq, are we looking at a United States that is more restrained going forward?
Absolutely. I think it's undeniable that all parts of the political spectrum have become much more attentive to limits on our power after a period in which there was broad agreement, if you remember those years after 9/11, about using American power, using the American military in these fairly expansive ways all over the world. People all over the political spectrum are much more hesitant about using that kind of power now. And we may be at, there's always a sort of pendulum in American foreign policy between these relatively ambitious uses of power and this sense of restraint. It may be that we're at one far extreme of the pendulum and we're about to see it swing back, because what we see in Afghanistan is a reminder that there are costs to restraint as well, just as there are costs to ambition and overreach.
And I wonder, too, if the United States is going to look internally next. There was also a great piece on From 9/11 to 1/6, January 6, talking about the domestic terror threat and far-right extremists, white supremacists. Is that going to be the next area of terrorism focus?
This is just an extraordinary essay by Cynthia Miller-Idris, who has been studying extremism of all kinds for years, and she traces the history of some of the domestic terrorist groups that we have seen a threat more recently, even as the threat from Islamic terrorism started to recede a bit. She traces their rise through these years, and as we all know, after seeing some of the news events of the past couple of years, this is sort of the unappreciated threat that crept up on us as we were focused on terrorism coming from far away. And what Cynthia Miller just points out in this piece is that we tend to apply some of the same frameworks. This goes back to this question of how the war on terror will continue to affect the way we approach things. We apply some of the same frameworks and tools to these groups, even though it's a very, very different kind of threat.
Tell me about our new isolationism. I find, Dan, absolutely fascinating. And in your wonderful book on George Marshall, it was a battle of 1947 as well. What is the color of our 2025 isolationism?
Well, it may be a little bit more subtle than that. It's not purely isolationist. It is a reaction to the perceived failures and the overreach of the years after 9/11, when we thought we could use the American military to go out and address threats completely, to stamp out threats completely, and to transform foreign societies. A lot of those uses, whether in Afghanistan or in Iraq or Libya, have proved to be much more difficult than people expected at the time, and much bloodier and much more costly than people expected at the time. At the same time, we are, as you know well, very, very focused on this threat from China. And in some ways, there are people in Washington and the national security world who see the China threat as a thing that is going to keep us from receding into isolationism, precisely because it is
we don't have a choice.
Kind of threat that is defining our American foreign policy. Matt Pottinger's piece in The Issue is a great demonstration of that.
Daniel Curtis Phelan, thank you so much. Just wonderful to begin our remembrance of September 11th with you on a Tuesday in August. Foreign Affairs, who won the war on terror? Can't say enough about it. Some very controversial essays there to give a perspective. And as Dr. Curtis Phelan said, particularly with all that's going on in Afghanistan. Futures up 8, Dow futures up 54. Lisa, what essay are you going to read first? I'm going to read Ackerman first.
Yeah, well, I just find it so interesting, the different natures of terrorism. Kailey rightly brought up the idea of domestic terrorism as an increasing threat that a lot of people talk about. There's also cyber terrorism versus the physical brick and mortar and the sort of, explosive terrorism that we experience experienced back in 2001. Again, all of these changing natures amid a world where the United States wants to pull back its international role, and how this will play out very much center stage today at the G7 meeting.
A run up on oil, Brent crude almost to $70 a barrel, not quite there, just below 70. That's a huge move in the last 2-3 days as well. The yield again on 127 on 10-year. Quiescence in the bond market, but nevertheless holding up. In the equity market, there's a bid. Wells Fargo goes some cautious to a framed upper single-digit optimism. That is of interest. Futures up 8. Stay with us on radio, on television. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The British admit it's a long shot, but today they and the leaders of other G7 nations will try to talk President Biden into leaving U.S. troops in Afghanistan after August 31st deadline to keep evacuations safe. UK Defence Secretary Ben Wallace told Sky News the problem is the security risks go up as the deadline grows nearer. House Speaker Nancy Pelosi and a group of moderate Democrats resumed talks today on how to advance President Biden's agenda. Hours of negotiations yesterday failed to break a stalemate. Pelosi wants to hold off passing a $550 billion infrastructure bill until a much larger package worth as much as $3.5 trillion is ready for consideration. At least 10 Democrats say they want a vote on the infrastructure bill now. And a special House committee investigating the Capitol riot is seeking phone, text, and other communications records, including some from members of Congress. The panel won't say whose records are being sought, other than it involves hundreds of people. Republicans have denounced the investigation as politically driven. The head of China's central bank is vowing to stabilize the supply of credit. He also says the People's Bank of China will boost the amount of money supporting smaller businesses and the real economy. New data show that both credit and economic growth slowed in July. And China's ride-hailing giant Didi has suspended plans to expand in Europe. Bloomberg's learned that's partly because of concerns over how the company handles passenger data. Didi had considered entering the UK, Germany and France. According to The Telegraph, the expansion will be put on hold for at least a year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What we plan to do is focusing on producing as much as we can and focusing on the science base on monitoring every single variant that appears around the world and see if this current vaccine in its current form is effective against this variant, or if it's needed to go through a booster, or if needed to go through a specific vaccine.
The gentleman from Pfizer, Albert Bourla, with the success of their mRNA effort and, of course, the success of getting full approval from the FDA. It is a movable story right now. And what is so important, folks, is that we see the worry of those vaccinated becoming ill. Amish Adalja is a prolific reader of the literature. He joins us now from Johns Hopkins Center for Health Security and their senior scholar. Dr. Adalja, John Byrne Murdoch over at the FT has been definitive of the graphical explanation of the complexity, the differential equations of your world. He makes clear that, yes, it's a big deal that those that have been vaxxed are getting ill, but it would be much worse if they weren't vaxxed. Discuss that.
So the whole purpose of the vaccine is not to be this magic force field or a bug zapper and stop every infection post-vaccine. What the vaccines are meant to do is to make any infection you have after you've been vaccinated very light, mild, no symptoms, clinically insignificant, with a very, very low chance of hospitalization or death. So that's why the vaccines are a game changer. It tames the virus, removes its ability to cause serious disease, hospitalization, and death on a large scale. So if you get the infection when you're unvaccinated, it's basically Russian roulette about what happens to you, especially if you're in a high-risk group. If you get the vaccine and then get infected, you've mitigated that risk almost entirely.
I look at the Oxford study that Mr. Bern Murdoch bases his work off of, and they have a phrase in there that's foreign to me. Explain what viral burden is. That's something new that I haven't seen in the pandemic.
So viral burden is just a kind of another way of talking about viral load, or how much virus is in your body. So what we know is that if you're vaccinated and you get infected, your viral burden overall is low. You might have a spike in viral load, but it comes down very, very quickly as your immune system kicks in as it's meant to. And that decreases the amount of virus you shed, or the amount of time that you shed. So the viral burden in a vaccinated person is smaller overall than the viral burden in somebody who's unvaccinated. And that's why they're probably less contagious, and also why they don't have serious disease, because before the virus is able to do all of its damage and get to all of the organs, the immune system halts that process.
In the meantime, Dr. Adalja, there are a lot of kids who are not eligible for the vaccine. Are children getting sicker from the Delta variant than they did the previous iterations of the coronavirus?
There's no clear evidence that this is particularly worse in children. It's just that children are getting infected because the Delta variant is so contagious, and it's like a heat-seeking missile looking for unvaccinated individuals. And you've got a swath of the population under 12 that can't be vaccinated, and you have low vaccination rates in children above the age of 12, between 12 and 17. So they're getting infected just like everybody else is getting infected that's unvaccinated. So we're not necessarily seeing any data that this is worse for children than any other version of it would be. Children tend to still be spared from the severe consequences of disease, but more of them are getting infected because you've got a more contagious variant. Many children are back to many of their activities because they're not likely to get severe disease. So all of that is kind of integrating together, and that's why you're sort of seeing those headlines, but some of them are misleading because it's more about the Delta variant finding unvaccinated people irrespective of their age.
Dr. Adalja, yesterday President Biden came out and said he would like all companies to mandate vaccinations among workers, among their clientele. How much, from a historical perspective in healthcare, is this the way to go, to foist that burden on the private sector and not necessarily come at it from a federal mandate?
The president can't really make a federal mandate outside of federal workers. He doesn't have the power to do that. But what we've seen in the past, for example, with influenza vaccine mandates in healthcare facilities, hospitals, that those were effective. That increased the rate of vaccination. And I do think as a business, if you're a business owner, you want your workforce to be resilient to the pandemic. You want your operations to continue. You want to be nimble in the age of a pandemic. And the best way to do that is have your workforce as vaccinated as possible, to have the people that you deal with as vaccinated as possible. So I think it makes sense for a lot of reasons, and hopefully more companies will make vaccination a condition of employment. We saw a handful of them doing it right after the FDA approval. Many organizations already do it if you're participating, for example, in sports, or you're going on a cruise ship cruise. All of those types of things, I think, will move people to get more vaccines. There are going to be some people who hopefully just line up now that the FDA approval occurred. But I do think if you want vaccinated people.
So if we do see people coming off the sidelines now that shot has full approval, which many said was their holdup in getting the inoculation, how quickly will that make a difference in terms of the case curve?
Well, it takes a while to get fully vaccinated. If you're talking about the Pfizer vaccine, it's 2 doses, three weeks apart, plus 2 weeks to be fully protected, and Moderna is a 4-week interval. However, we know that after people get their first doses in, about a week later, you start to see significant protection. So I would say if people got vaccinated yesterday or today, we might start seeing benefits in a week or two. But we've also seen vaccination rates go up even prior to the full FDA approval. Had some million dose days, and that may be something that also will have an impact. We are seeing some of the curves start to come down in some of those hard hit states, but not quick enough, and this can only help.
Dr. Adalja, thank you so much. Greatly appreciated. Amish Adalja with Johns Hopkins Center for Health Security. There with a real stream of information coming out. I put out on Twitter the John Bern Murdoch summary of the Oxford paper here on the vaxes and that raging debate that's going on right now. And Lisa, this really goes back to, I believe, what we saw when I was taking the surveillance nap from New Jersey, following on from New York City, following on from Chevron, CVS, and I think the Abramowicz household. If you're not vaccinated, don't show up for breakfast.
Basically, you might as well just sleep on the street. That's what I've told my kids. No, honestly, I mean, basically New York City coming out and saying all school teachers need to be vaccinated and staff of the New York City Department of Education. There is a question right now, though, of where we are in this curve. Kailey, you were talking about this. In other words, how do we flatten the curve? And you've seen that basically a lot of people people are optimistic. Peak COVID fear, we heard that yesterday, and yet we're seeing an uptick, a resurgence over in the United Kingdom. The sort of push-pull of optimism versus pessimism kind of dividing health officials.
And right now the curve is, it's flattening out in the places where the virus surge originally started. So the Ozarks cases are down about 12% from its peak. We're starting to see them come down in places like Florida and Louisiana. But to your point, Lisa, it's a question of whether or not they stay down, especially because the Delta variant in all likelihood is not the only variant that we're going to be contending with. There could be more to come. And so until you get more people vaccinated, there is always a chance that that curve is going to tick back in the upward direction.
What do you think? I mean, Lisa, do you think that we'll see an upsurge here back to 900,000, a million vaccinations a day? I mean, we've had a little bit of that, but
it's interesting to see that the uptick in vaccination rate has been in the South. Right? I mean, the idea that some of the hardest hit places are now starting to see vaccinations increase. Question of how much leadership there is, too. How much do people get pushed to start getting vaccinated? Some of the anti-vaxxers that were public officials are getting ill, and that's changing.
I failed. Brent crude, I'm like waiting for $70 a barrel, and I just can't get there. 69.98.
You should stash some oil in your living room. I recommend it.
I recommend doing that. I got to fill up the Bentley. That'll help. 1.27% of the 10-year yield. Stay with us. Brian Belski next.
With valuations where they are, with sentiment as stretched as it is, this is not a market that has a lot of room to absorb bad news when we do get it.
Without financial stability, the Fed can't achieve its goals on inflation.
The expectation is the Fed will certainly signal a much more dovish tone.
This is a Fed that's going to take its time. It's going to measure twice and cut once.
The taper will be announced likely this fall, and by the winter, the Fed will be pulling the trigger on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan DeFaro, Lisa Abramowicz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television. An interesting Tuesday, interesting Monday, up, and away after what we saw last week. Futures up 10, Dow futures up 66. Abramowicz, that oil in your living room, you're killing it. Brent crude moments ago, $70 a barrel.
Yeah, I mean, forget the doctor's bills for my kids. The crude barrel that I had in my living room was fantastic. Look, there is this push-pull of the resurgence in the economy following the pandemic that seems to be ebbing and flowing. And right now, it seems like perhaps, especially with the FDA full approval of the Pfizer vaccine, especially with perhaps China coming in with a little bit more support for its economy. Also, the Ningbo port, we didn't even talk about this. It started accepting ships from the U.S. for the first time. It's open now again, and that's earlier than people expected. So all of these positive developments just giving wind to what already was baked in, which is people knew that it would come back. It was just a matter of when.
But Lisa, this is important, and I think John would say you're expert at this. You got Brian Belski coming up, optimistic on the markets, looking at earnings as others. Chris Harvey upgrading to a more optimistic Wells Fargo from where they were cautious. Lisa, we're all focused on Chairman Powell. Have we pushed Chairman Powell aside?
There is a lack of expectation that he will make news or that he will make waves, right? There's this expectation he's going to give himself maximum flexibility. How often do we hear that? And yet the fact that we are getting more confidence in the economic recovery, at what point does that push the Fed to start tapering $120 billion of bonds that they buy every month? How is that supporting the labor economy at this point, Tom?
Kailey, Leinz, where do you see the confidence in the recovery?
Well, I think it's coming from corporate earnings. That's what we saw with Chris Harvey over at Wells Fargo, upping his S&P 500 year-end target for this year, 2021, to 48.25, nearly 1,000 points above his previous target because the earnings growth has been so strong. And we're getting more crossing the wire. It seems like every minute, Tom. Best Buy just raised its full-year comp sales forecast to nearly double what it previously saw. I mean, companies, the corporates are doing quite well, Tom. And as long as that is going on, it's hard to turn against the equity market.
Yeah, it's interesting. We'll have to talk to Belski about this. Best Buy says a major reason was television sales in Minneapolis because the Vikings this year may actually win. We'll get to that in a moment. Let me do a data check right now. Futures, they advanced in the last hour, up 9. Dow futures up 35,344. That level, the VIX is 16. Print yesterday, 17.15. Now, yield's doing nothing this morning. A nice stasis there. The real yield, a negative 1.02 against stasis over the last number of days. dollar, I'm going to call it a churn this morning with euro 117.35. Kailey Leinz nailing oil this morning, saying, Tom, shut up and look at it. $70.11 a barrel in Lisa's living room. Yeah. Abramowicz at the wall.
Yes, I am. And I got to say, Kailey nails it every day. So it's not anything unusual. What I'm watching today, 9:30 a.m., the G7 meeting is occurring virtually. And it has renewed focus this morning after we learned that a top U.S. official met with Taliban officials in the past couple of weeks before executing some of the evacuation ahead of that August 31st deadline. How much will this push-pull come to the fore? How much do you negotiate with the Taliban, previously recognized as a terrorist organization? How much will the allies get together to try to evacuate people from Afghanistan who want to leave? 10 a.m., we get some economic data. U.S. July new home sales expected to be robust following the hotter than expected existing home sales data we got yesterday. August Richmond Fed Manufacturing Index data. I'm curious to know about the inflationary input pressures. Again, how much are we talking about the stock market that is divorced from the economy? Are we seeing economic pressure, particularly on the lower income tiers with the higher inflationary pressures that are not necessarily reflected when we start talking about 5,000, 6,000, 7,000? Can we get a 10,000 S&P projection sometime in the future? Yeah. 1 p.m., we get an auction, and Tom, this is for you.
Thank you.
U.S. is planning to sell $40 billion of 2-year notes. August 11th, there was a blockbuster 10-year Treasury sale. It turns out a record proportion of that sale was taken up by foreign buyers. This is an interconnected international bond market. When we talk about why yields are so low, when we're talking about inflation picking up to the highest level since 2008, this is the why. Globally, we are a low-rate world, and in that world, how much can one country move alone, Tom?
Oh, it'll be interesting to see. I think maybe I'll interrupt my nap to see what the 2-year auction is today. This is important. This happens once in a while, and it seems to be all the different financial news agencies. There's a correction on Best Buy now, some confusion on those headlines. I know Kailey was day trading Best Buy here as Lisa was talking, but a little bit of confusion on Best Buy earnings. We'll get that straightened out. This is a joy. It is a research report of great acuity, great charts, and great belief in the American economic experiment. Brian Belski joins from BMO Capital Markets. He has been a bull. He has been correct. Brian, I got to make some news this morning. Help me here. Can I get a 5,000 out of you on SPX?
Good morning, Tom. We hinted back in May when we upped our number. Originally, we came out in November of 2020 and said the S&P would hit 4,200, and then in May we moved up to 4,500. And we also hinted in May, quite frankly, that our earnings in our 4,500 would be too low. I'd say stay in tune on that. But, we don't chase markets. We have a process and discipline. I actually think it's a contrarian indicator when everybody's raising their numbers at once. And so, again, I'm not calling for a correction, to say the least. But, August, September, as you know, are typically and historically very volatile times. And during volatile times, Tommy, you want to buy quality. And this is something that I've hearkened on your show for decades in terms of being a high-quality fundamental investor, and I think now's the time. Remember, a year ago at Jackson Hole, Mr. Powell changed the mandate, and I can't believe people aren't talking about this. They changed the mandate and the focus away from inflation and toward employment.
Yeah.
And I think this has been a year, 2021, if you do a Google word search on inflation, it's all over the place, and I think most investors on the institutional side have been very wrong trying to play the inflation trade, and instead should have been properly allocated in equal weight across the board in terms of size and style, and that's been the right call.
Yeah.
And I think that's going to continue. So I think, again, I think we're in a bottoms-up stock-picking market, something that we have not seen
Brian, I'm so sorry.
Since the 80s and 90s.
Tom just sent me a note, and he said, please, he's just crushing me. I didn't get in. I know he didn't get in.
I can't get 5,000 out of Belski.
He's so upset. And he's in triple leverage all cash, and here you are saying that you missed it, so, boo on you. You focused on the wrong thing. Gina Martin Adams of Bloomberg Intelligence came out, and she said that the biggest threat to equities may be the Jackson Hole confab, more than even the Delta fears that we've seen. Do you agree with that?
I don't think so. I think, listen, I think the market is telling you that we're closer to disinflation than inflation. That's kind of number one. Number two, the Fed's going to do a great job. I mean, I don't need to be the smartest person in the room. You know who the smartest person in the room is? Jay Powell.
I was going to say.
Kailey. So let's listen to them because, at the end of the day, we're going to dictate this. And then lastly, on the Delta variant, I think the Fed's going to play defense. And I think everybody wants to taper because the majority of institutional investors and Tom missed the market. And so they want a correction. And so if you go back to, there's been one official taper, remember, in history. One official taper, and it happened in 2014. And when Bernanke hinted of it in Congress in September of the previous year, the market was down 5.8%, then it rallied 10%. And then between where they officially announced taper and when they actually started to raise interest rates, stock market was up 10%. So I think that's kind of the perspective that people are missing.
Will the announcement of a taper this time around, given how well telegraphed it has been, actually be a market event?
No, I actually think people, I think it's going to be Jack be nimble, Jack be quick. We all have attention spans of gnats, and the market will probably pull back a little bit. But I actually think the market could rally on this, and that's a little contrarian, I know. But I think at the end of the day, we want it. Now all of a sudden we have it, and let's move on with the next with what's going on.
I got 20 seconds. Does high quality win in this new up market, and particularly, I don't know, individual stocks like Amazon behind, but just in general, does high quality surprise into Q4?
High quality surprises, and it's about earnings consistency, Tom, and you don't want to buy earnings volatility, you want to buy earnings consistency. So it is tech and communication services, but it's also financials, Tom. So that's where we would really be focusing.
Brian, thank you. Too short a visit. Brian Belski with us, BMO Capital Markets there. We await a rejigger, if I will, of his mathematics on where the S&P 500 is. 44.83 on SPX. I got to go back. I'm sorry, Lisa. Oil, it's down 47 days in a row. We're all going to die.
Yeah.
$70.09 a barrel, up 1.9%, Lisa.
Okay, were we really saying that everyone was going to die? Let's be real clear here. We were not necessarily
that was the media tone.
Look, the tone
go
was
from narrative to narrative.
Okay, and actually, I keep going back to Alberto Gallo saying that we saw peak COVID fears, peak Delta fear kind of emerge last week, and now is the sort of buy the dip. But this dip wasn't that much of a dip, Tom. I mean, yes, we saw it in the energy space, but other than that, I don't know. And you still are seeing pressure in the airline travel sector. Just throwing that out there.
Okay, that's our gloom for the day. Kailey, weigh in here. I mean, Brian Belski there. And again, the theme I see here, Kailey, today is earnings.
Yeah.
And the multiple. Eric Friedman with a 24 multiple. Others maybe a more cautious multiple, but
I mean, and Belski at 4,500. The index closed yesterday at 44.79, Tom. I mean, we're only talking about 20 basis points of room in the next month and a quarter.
Yeah.
Something's got to give there.
I'm looking for an entry point.
I think you missed it.
Trade.
Buy oil in your living room.
Buy oil, yeah.
The actual barrels.
Okay.
They
the
make
VIX,
great chairs.
17.19. Stay with us. This is Bloomberg on radio, on television.
With the First Word News, I'm Ritika Gupta. CIA Director William Burns reportedly held a secret meeting with the leader of the Taliban. According to the Washington Post, the two met yesterday in Kabul. There's no comment from the CIA. The Post says it's likely the discussions involve the impending August 31st deadline for U.S. troops to leave Afghanistan. Vice President Kamala Harris warns that China poses a threat to countries in Asia. At the same time, she reassured countries in the region that the U.S. would not force them to choose between the world's two biggest economies. In a speech in Singapore, Harris spoke about the vision for a region built on rules, human rights, freedom of the seas, and unimpeded commerce. New York State now has a new governor. Kathy Hochul has sworn in just after midnight, becoming the first woman to serve in that role. Hochul takes over after fellow Democrat Andrew Cuomo resigned over a sex harassment scandal. She has to overcome the shadow of that scandal whilst dealing with New York's sluggish recovery and rising coronavirus rates. And COVID's resurgence has hit airlines from the US to Australia to China. Southwest Airlines blames the Delta variant for a rash of cancelled bookings and a slowdown in demand. Meanwhile, Chinese airlines are offering the fewest seats in 6 months. The bright spot in the industry, Europe, the only place where so-called vaccine passports are used. European carriers are now adding more flights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
The goal is to get as many people out as fast as possible. And while we're glad to see the numbers that we got yesterday, we're not going to rest on any laurels. The focus is on trying to do this as best we can by the end of the month.
John Kirby with the Pentagon managing the message as well. There's two juxtapositions here, the messaging from Washington and, of course, the images that we see from Afghanistan as well. Not that we are Taliban or Afghanistan worn out, but I thought I would lead now with the debate in Washington. We do that with Anne-Marie Horton, who joins us, our Bloomberg moderate correspondent. Anne-Marie, I look at the calculation of the moderates, and I've made a project of this over the recent weeks to actually look at why they are moderate. Let's look at the Blue Dogs and what they've done from the 90s when they became evident. There were the Yellow Dogs, the Blue Dogs, the Bull Weevils. I can't keep track of them all, but the Blue Dogs were 59 members and have crushed down to a slim, moderate margin over time. Anne-Marie, one of those is from the 7th District of Virginia, Spanberger. She won by 7,000 votes the last time around with a barely 50% majority. That's a moderate, isn't it?
Yeah, these are people that are under pressure from their congressional district that instead of going for the Republican, stick with me and I will not go too far to the left and make sure you get what you need. And that's really what that is really what this is about. And we should note, Tom, it was 9 moderates yesterday that were going up against Speaker Pelosi. They picked up a 10th last night from Orlando, Representative Stephanie Murphy, and she wrote a pretty scathing opinion piece for her local paper, talking about what is going on in the leadership and how they need to take up bipartisan infrastructure and why that is so important.
Stephanie Murphy is from Vietnam. She's one of the leaders of the Blue Dogs as well. She's in a really interesting, brutal district in Florida that could go Republican. How powerful is she, Anne-Marie?
Well, any individual in Congress is less powerful than, say, you'd have a senator, but this is about numbers, of course, and Speaker Pelosi can only lose 3 votes. And if the moderates just keep picking up numbers, there's more potential that it's going to be the speaker that has to come in line with what they're asking for and less so them. I would say right now it is not exactly the same negotiations as it started. By the way, there was no vote. They're reconvening today at noon to discuss all of this, but it does seem like the moderates potentially can give in a little bit if Speaker Pelosi is able to find a way to make sure that there is an exact date in the future that chamber will take up voting on bipartisan infrastructure.
Markets are closely watching this, in particular when it has to do with tax hikes. How much political power is there behind getting those tax hikes through at a time when so many people don't want to have their name behind tax hikes ahead of the 2022 midterm elections?
It's a very good question. What we know is that once the budget resolution is passed in the House, then all of these committees in the House and the Senate are going to start drafting up plans on how they can actually enact reconciliation. We are weeks, if not months, away between what reconciliation will look like. And the Senate Finance Committee is going to be putting out a menu of potentially what the tax hikes are. Now, there's going to be some on the progressive left that certainly want higher tax hikes, but they need to make sure they have every senator on board. And you're going to have the likes of Senator Joe Manchin of West Virginia saying that tax hike is way too high, and even $3.5 trillion is too high. So even if the House is able to pass through the budget resolution, it just sets really off the time to get the details for reconciliation. They are going to be debating what goes in this bill for weeks.
How much urgency is there behind getting this done right now at a time when Afghanistan is sucking up a lot of the oxygen in the room?
It's a good point. We heard from Representative Schiff yesterday, who is part of that classified briefing, and he actually said in relation to the timeline, which that August 31st deadline, a week from today, that the U.S. says they will withdraw their troops from Afghanistan. He says that he doesn't think that timeline is doable. So you do see it, as you say, sucking up a lot of air in the room and really painting a cloud over these negotiations. But I would say that Speaker Pelosi is pretty focused on making sure she can get this through.
Speaker Pelosi may be maintaining her focus, but President Biden certainly has no choice but to focus on this Afghanistan issue, especially as he's getting on a phone call with other G7 leaders in about 2 hours' time at 9:30 a.m. Eastern Time. What's the hardest question he faces in addressing them?
Well, CNN's reporting that the military says he needs to decide by today whether or not he is going to extend that August 31st extension so that they can plan to make sure that they're safely able to draw down 5,800 troops that are securing the airport right now. That deadline, that is going to be key today. It is not just anymore UK Prime Minister Boris Johnson that's pushing for this. France, Germany, we heard from Heiko Maas, the German foreign minister yesterday, even saying that they want to continue flights out of Kabul even after the U.S. leaves. Now that's going to be about whether or not Turkey is going to be able to maintain control and security of the airport, but that is going to be one of the key focuses today. I would also say whether or not the group is going to act in unison on whether or not they will consider the Taliban. Will they consider it and call it, negotiate with it, as well as sanctions? There's one thing I would say, though. This G7 met in early June in Cornwall in the United Kingdom, and three sentences on Afghanistan was in their communique. And today they have a special session devoted to this.
I think it was hard to know even then how the situation was going to unfold, the speed of it taking most everyone by surprise. But Anne-Marie, coming back to domestic affairs, of course, we had the full approval of the Pfizer vaccine yesterday. Joe Biden calling on companies saying, hey, you need to mandate that your employees get vaccinated. As Lisa pointed out earlier, really putting the onus on the private sector. Are we not going to get any more mandates from the administration when it comes to the public sector?
Well, his press secretary, Jen Psaki, was asked exactly about this issue, and she said that as of now, it's not changing on the federal level, but she does think it's going to be done agency by agency. So certain agencies may now start to mandate the vaccine. We've already seen what's going on in the military. Now that we have full approval, they are going to mandate those vaccines, that you have to take up those vaccines. So it doesn't look like it would be federally wide done, but it does look like agencies are going to be put under a little bit of pressure to mandate them, similar to what we are seeing in private companies.
Anne-Marie, thank you so much. Anne-Marie Horton with us, our Bloomberg Washington correspondent. Two major stories that we see in Washington. And again, follow our coverage, the 9 o'clock hour on the G7 meeting and on to the president's comments later today. In the data front, futures up 8. I need to give you those levels because we've lost track. 4483 on the S&P, Dow 35333. Nasdaq 100 is just extraordinary, 15,343. Lisa, to me, that is the biggest blown call of 2021. Nasdaq and the big tech, they're dead, aren't they?
Yeah, they were dead coming into the year, and then they absolutely smashed it, at least for the most part. Actually, Amazon not. There is discretion even within big tech. It's been a nuanced 2021, Tom.
Yeah, but to the two of you, and Kailey, let me go to you. Or, Lisa, jump in here and be rude, but not the first time.
Thanks.
But, I think with Amazon, it's all about Mr. Bezos steps aside. And on this 10th anniversary of the resignation of Steve Jobs, it was the same way. Steve Jobs, Apple will fail because Steve Jobs is gone, right?
Yeah. You can weigh in on that, Kailey. Go for it.
No, I'll let Lisa be rude.
I'd love to be rude. We could talk about, Tom, what's your positioning? When are you getting out of cash?
I was looking for an entry point on Apple at $3 a share.
What about Bezos leaving with, Amazon?
Not going to happen. This is Bloomberg. Stay with us. We're rude. Bloomberg Surveillance. Good morning, everyone. Greatly appreciate your attendance today. John Farrow out. Kailey Leinz in for John and Lisa Abramowicz and Tom Keene. And moving through the markets, and they are up markets. We'll get to Romaine Bostic in a moment here on the different nuances of individual securities. Futures up 9, Dow futures up 65. The VIX, a real improvement over where we were Thursday and Friday from an 18 level down nicely through 17, a 16 handle. And the enthusiasm yesterday afternoon, 17.18 right now. Yields 1.26%. Dollar churning as well, and we make note of oil with a little bit of uproar in Mexico on an explosion there over the weekend. $70 a barrel, and Brent crude up 1.73%. Let's get right to it to save time for Alan Ruskin of Deutsche Bank. Romaine, what do you have this morning?
Hey, good morning, Tom. Yeah, of course, a lot of the optimism that you're seeing reflected in equities as well as in the commodity space, a lot of that ties into the optimism that you're seeing over there in China. We should point out the Hang Seng Index up 2%, the Hang Seng Tech Index up about 7% on the day on the back of all of those big, large cap Chinese tech companies rallying pretty hard. They're rallying over there, and that's feeding into the ADRs here in the United States. Alibaba, that's your second biggest mover here in the pre-market. On the U.S. side, up about 5%. DD, Pinduoduo, JD.com, all of them pretty much higher on the day, 3, 4, 5% across the board. Flip up the board here because the biggest mover out there today is a small biotech company, Cara Therapeutics, right now up almost 22% here. Approval here of a treatment related to chronic kidney disease, getting FDA approval for that. You're seeing those shares rise. Palo Alto Networks, big cybersecurity software company, reported earnings last night. They pretty much beat across the board on those fiscal fourth quarter numbers. Their guidance for the first quarter on the revenue side, top end of that guidance is higher, or excuse me, the bottom end of that guidance, I should say, was higher than the top end of what the street was looking for here. A pretty bullish forecast going forward here for the full fiscal 2022 year. We should point out CrowdStrike also on the back of this. They don't report until next week here, but of course they're in a similar space as Palo Alto Networks. There's a big cybersecurity meeting at the White House scheduled for tomorrow, according to Bloomberg, reporting the heads of Apple, Microsoft, Amazon, and a few other big companies are going to be there. The idea here that the big push towards cybersecurity spending, both from the government and from the corporate side, is going to benefit Palo Alto, CrowdStrike, and the rest of its competitors.
Romaine, thank you so much. Greatly appreciate that. Look for the close tonight with Romaine Bostic. This is a joy because if you're at 60,000 feet, you've got to keep your eyes on the ground. Alan Ruskin has made a career of that, and working with David Fokerts-Landau at Deutsche Bank publishes the most interesting and twisted literature. In this time of our paranoias, our worries, our angst about inflation and such, good to catch up with the chief international strategist of Deutsche Bank. Alan, Fokerts-Landau and the team worry about German inflation. They talk about the tail risks. What is your tail risk into Q4?
I think inflation globally is very much the tail risk. I think the markets have taken a very sanguine view that, particularly in the US, the Federal Reserve is going to be correct, that a lot of the inflation forces are in fact transitory. But the possibility that they're wrong and the consequences, if they're wrong, are enormous. So I would say that, in terms of macro risk, this is one of the most elevated risks out there, and is much more important as a concern than macro risks we've had for quite some time, certainly since COVID's broken.
The theme from last week's angst to this week's celebration can be institutions changing. Arguably, Keynes, when the facts change, I change. China came to the rescue with a dialogue of accommodation by their central bank. Do you assume other institutions will do the same thing under angst? They'll just solve the problem for us?
No, I think the problems tend to be quite localized and need local solutions. The U.S. economy is just too big to be able to rely on other central banks solving its problems. I think, Tom, you're right to point out that there's been this dichotomy really between risks associated with China and optimism essentially related to the U.S. And I think you see this in terms of the schism we've seen in terms of the Chinese stock market and the U.S. stock market, which is having broad ramifications in markets that I cover most closely, the currency market in particular. So I think there's something we've got to watch for, but I think China can make things easier for global markets, absolutely. It has enormous influence, but if it's U.S. problems like inflation, for example, the Federal Reserve is going to have to solve that one.
Alan, I'm curious going forward about how consistent it is for a higher inflationary regime, and then to see bears become bulls, bulls become even bigger bulls when it comes to equities, particularly in the United States. Is there an inconsistency here?
Well, I think there are a lot of bond bears out there, and they've had a very hard time since pretty much the end of the first quarter. Most of them have capitulated at this point in time. I think there's an acceptance that if the 10-year yield is going to trade at something like 1.25%, it's going to be very hard to tell a story that's particularly negative as far as U.S. equities are concerned. Unlike in the Trump era, when you were getting hit by trade-related issues, every now and then creating cleanouts and buy the dip opportunities. You don't have that this time around. So you've got to have other features that create cleanouts, and obviously the inflation story has been part of it. But even there, the market's taking a very benign look at the Fed. If you look at what's priced in through the end of 2024, it's less than 100 basis points of tightening. That's nothing in the grand scheme of Fed's tightening cycles. So the market's taken a very benign look at things, but obviously the back end of the bond market, I think, is creating the backdrop for very solid equity market and very solid U.S. risk.
The S&P is up more than 20% year to date. Last year, 16%. The year before, 29%. How much longer can we continue with these kinds of incredible returns?
Look, you'd expect the returns to slow down, but I think what you're saying there as well is that there are a lot of participants who've got into this equity market at relatively good levels, and they're not going to get shaken out by something that's willy-nilly. They're going to have some big macro story out there. The most obvious one is the one we've been speaking about, which is that inflation is not as benign as the Fed would make us believe. The Fed has to jump in and generate some more aggressive tightening going forward, particularly into 2022. That would be the kind of story that would upset the apple cart. But right now, if you look at if China is going to go through a phase where it's not actually generating huge amounts of international volatility, then the U.S. is not going to be the instigator of that. As I said, not whilst the bond market's this well behaved, and not while expectations from the Fed are this benign.
Something else that could upset the apple cart, at least for some of those more richly valued stocks, would be, in theory, higher yields if they do ever materialize. Do you expect them to materialize in the near term?
I don't think necessarily in the near term. I think there have been some fortunate features behind this bond market rally. The most obvious one is that the Treasury has been issuing far less in the way of paper, primarily because they've run down their cash balances at the Fed from, approaching 1.6 trillion in February down to close to 300 billion now. So that's 1.3 trillion that they've avoided in terms of issuance because they've run down their cash balances. So that lack of supply in combination with what the Fed does in terms of quantitative easing has created a very favorable demand and supply dynamic. That demand and supply dynamic probably deteriorates, but it deteriorates slowly. And therefore, I think the pressure will be for higher yields, but it's going to be much slower than certainly I was anticipating back in quarter one.
And it wasn't just you. That was the consensus call coming into 2021. Yields would be higher. The other consensus call was the dollar would be weaker, and yet that too hasn't really materialized. Can you make a case for dollar weakness in this moment?
I don't think right now, I think you'd make a better case for buying the dollar dip, as it were. I think the dollar is fortunate in terms of where the smile dynamic is playing out at the moment. I think you have, on the one hand, if risk looks okay, particularly U.S. risk looks okay, then the tapering story is still at play. That's helpful for the dollar against G4 currencies. If, on the other hand, you have international worries like we've recently had in China, then you see risk off, commodity prices coming off, and the dollar does well against commodity currencies. So on both sides of the smile, the dollar does pretty well. So I think right now that smile, those tails, as it were, on the smile, are on balance, I think, more helpful for the dollar than hurting the dollar.
Alan Ruskin, thank you so much, with Deutsche Bank, their chief international strategist. Futures up 7, Dow futures up 49 as well. Quiet to the market all of a sudden. Let me look at the economic data. Lisa, I've been remiss. I haven't looked at, where we're heading in 1 hour. We've got new home sales at 10 o'clock, more housing data.
Yeah, and more housing data, but honestly, this
is
a pretty quiet week when it comes to economic data. It's August, and I will say the quietness is a risk that some people are pointing to as well, because you actually are seeing a lack of liquidity in the Treasury market to some degree. Yeah. Some people saying that sets up for a bit more volatility heading into Friday, but I think this is a stretch. People want to just go on vacation, Tom. Theoretically, some people out there.
Some people out there, not that I know who they are, but
No,
it would be a good week to go to Wyoming, except as Alan Ruskin says, it's changed.
I think it would be a good week to go to Virginia. I hear that there's an event taking place. Maybe we could crash it. What do you think, Tom?
Oh, there's a movie about that.
I was going to say they could make a movie about you two. Only if you ride in on horseback like you were going to do at Jackson Hole.
Okay, so we can come to your wedding if we ride in on horseback?
Yeah, 100%. White
Okay.
horses specifically, or Clydesdales.
Okay, got that, Tom? Honestly, I do think a lot of people are on vacation. It's been a long year, and I think that people were very affected by the idea that perhaps the pandemic would not be ending as quickly as people thought. Now people are getting more optimistic, and those fluctuations in the Delta variations seems to be kind of dictating tone a little
And the
bit.
change of this, of course, folks, as we near the school season in the East, and of course, many of you with children already back in school.
Oh, yeah, that.
All of a sudden, it is a changeable feast, and we've seen that with where we are with the Delta variant. Please stay with us. We've got much more to come, including the housing data here at 10 o'clock. Futures up 6, Dow futures up 48 on radio, on television. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The British admit it's a long shot, but today they and the leaders of other G7 nations will try to talk President Biden into leaving U.S. troops in Afghanistan after the August 31st deadline to keep evacuation safe. UK Defense Secretary Ben Wallace told Sky News the problem is the security risks go up as the deadline grows nearer. House Speaker Nancy Pelosi and a group of moderate Democrats resumed talks today on how to advance President Biden's agenda. Hours of negotiations yesterday failed to break a stalemate. Pelosi wants to hold off passing a $550 billion infrastructure bill until a much larger package worth as much as $3.5 trillion is ready for consideration. At least 10 Democrats say they want a vote on the infrastructure bill now. A special House committee investigating the Capitol riot is seeking phone text and other communications records, including some from members of Congress. The panel won't say whose records are being sought, other than it involves hundreds of people. Republicans have denounced the investigation as politically driven. And the head of China's central bank is vowing to stabilize the supply of credit. He also says the People's Bank of China will boost the amount of money supporting smaller businesses and the real economy. New data show that both credit and economic growth slowed in July. And China's ride-hailing giant Didi has suspended plans to expand in Europe. Bloomberg's learned that's partly because of concerns over how the company handles passenger data. Didi had considered entering the UK, Germany and France. According to The Telegraph, the expansion will be put on hold for at least a year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Absolutely. He's done a terrific job. He has the whole FOMC behind him. I think he's articulated what the Fed's policy is in a very clear and consistent way. So I don't see any reason why he wouldn't be reappointed.
Unusual. Bill Dudley really stepping up and supporting Chairman Powell for a reappointment. Mr. Dudley, of course, senior economic advisor to Bloomberg and, of course, the former president of the New York Fed. We have a packed segment here. We're going to get right to it with futures up 7, and it's real simple. There's a wall of money out there, which means I think still bond price goes down, yield goes up. It's something like that, David Wilson, isn't it? Did I do okay there?
Tom, you did just fine. But
where are
the
we
thing
on
is
the relationship?
that relationship's kind of breaking down a bit, and it's something that Stephen Vanelli over at Knowledge Leaders Capital pointed out the other day, that, we've seen the S&P 500 setting record after record. It came really close to doing that again yesterday, though. Kind of tailed off.
Right now, futures up 6.
Yeah, I mean, we may be looking at another record today. Here's the thing, though. You have not seen bonds go along for the ride. Prices have fallen, and that means yields have risen. And so that's what the chart represents. By inverting the yields, you can sort of see that direct relationship in terms of price. And you're just not seeing what you saw earlier in the year with stocks rising.
How unusual is this? I mean, in the last 10 years, is this like a once-a-decade thing?
Well, I mean, maybe not so unusual, but if you're looking for a reason to be concerned about whether what we're seeing in stocks is sustainable, then that is one of the indicators you can point to. And actually, Vanelli had noted another of others in his note that was out the other day on the firm's blog. So, it's just the stock-bond relationship is the one that got my attention. And that you're seeing it not only with high yield, which tends to track stocks more closely, but also with investment-grade debt.
Okay, David Wilson, thank you so much. With a chart floating around on the zeitgeist right now, big advantage there to have the Bloomberg at his disposal every day. She is on the Bloomberg, Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist. It's upgrade time, Gina. The people cautious are lifting estimates, mostly based off earnings. What's the earnings integrity right now?
Well, it's actually quite excellent. What's happening with earnings is largely driven by what's happening with revenue growth, and revenue growth is running at about a 20% pace year on year. So what we're seeing in terms of the earnings stream is now analysts starting to capitulate to what appears to be a sustainable recovery in earnings growth. Now, will we see 20% revenue growth into perpetuity? No. But analysts are now forecasting that we'll largely average about 10% revenue growth over the next couple of quarters. So certainly a sustainable uptrend in earnings has been a part of the optimism that has emerged in equity prices over the course of the last 6 to 12 months.
Gina, it's Tuesday. It's a good day to try to worry about something or other. So how much do we worry about the Jackson Hole meeting on Friday? What could potentially be a threat to some of these very bullish forecasts that we're seeing come out of Wall Street?
Yeah, Lisa, you know that I am a very big proponent of the idea that you follow the Fed with the equity market. And, I think if the Fed starts to guide for a balance sheet taper before year end, we're going to be in for a period of volatility. I know that the market relatively easily absorbed the July minutes last week. They absorb that, though, because you get a bunch of Fed speeches after the minutes, you get a bunch of chatter about Delta variant, and that allows the market to sort of settle into a complacency about the Fed remaining incredibly easy for an extremely long period of time. But the reality of the situation is every time the Fed has tapered over the last 10 years, it's created a more volatile short-term equity market. Does it dismantle the long-term trend? Not likely, because the earnings growth environment is relatively sustainable, as I just mentioned. But it does tend to create volatility. It creates disturbance for the equity market, and I think that's what you expect if and when the Fed finally does start to taper the balance sheet. I think there's a chance, certainly, a significant chance, even though the conference has gone virtual and we've had the Delta variant really disrupt the path of expectations recently, I think there's a pretty significant chance that Chairman Powell still talks about the balance sheet and where the Fed is going to take that balance sheet over the course of the next 6 months on Friday. And that's not going to be easy for the market to absorb.
Well, what part of the market can absorb it the least easily? What area is the most vulnerable?
The area that's most vulnerable by far is small caps. When we model small cap valuation ratios, we use the Federal Reserve balance sheet as a key input to that. That's done by our small cap strategist, Michael Casper. Unlike large caps, which are much more driven by actual rates and spreads, small caps have a historically significant tie to the balance sheet itself. So the idea that small caps have been underperforming large over the last several months is certainly one of the potential precursors to the fact that the Fed is going to change the balance sheet perspective over the course of the next 6 months. I do think it's one of the reasons small caps have underperformed. They probably continue to underperform. In the large cap space, you've got value stocks, which are certainly most vulnerable historically to tightening, and low vol, which should perform best. That's also been happening in the last several months. So the internals of the market are slowly preparing for a balance sheet taper or a change in Fed policy. We're just not seeing it in volatility yet, and I think that's kind of the missing link that we're likely to look for changing over the course of the next several months.
Gina, just quickly here, you have a nuanced approach. This isn't just all of a sudden we're going to get a drawdown like the one that John Farrow is meditating on, but rather that we could see specific sectors fall out of bed. Does that mean the end of reliable double-digit earnings for the S&P on an annual basis after years of blockbuster returns?
Yeah, I think that you do see, most likely what you see is a slowdown in gains. And this has been our base case scenario really since the spring, is as we migrate to a new phase of the economic recovery, we're no longer in this surge out of recession. We sort of move into a more normalized expansion pace. That becomes the case for earnings as well. You're not going to see 50 to 60% earnings growth over the course of the next year. You're going to see that normalize and slow down into a 10 to 15% pace, and then likely settle into about a 10% pace going forward. That will accompany, along with a tightening policy from the Federal Reserve and changes in interest rates, that should accompany a slowdown in price appreciation. Your fastest gains always come right out of recession, and then the market tends to slow down in accordance with the slower pace of expansionary growth.
And then it doesn't. Gina Martin Adams, thank you so much with Bloomberg Intelligence. And Lisa, that goes to Ben Laidler with an optimistic note this morning, really underscoring high quality. And Ben Laidler, as Gina Martin Adams mentioned, has gotten on board 3 years consecutive double-digit return. That's a rare view.
It's a rare view at a time, especially of such low yields. When you think about how much has already been baked in, how much lower can we go? You do wonder if there is this dissonance here. How long can we remain in a Goldilocks scenario in the bond market with bonds yields remaining so constant, supporting stock valuations with continued optimism about pricing power and growth?
Yeah, we're going to have to leave it there. We don't have enough time here, but I really want to underscore, folks, that the foundation for so many of these upgrades is in earnings and revenue view, devoid of Jackson Hole talk, devoid of what the larger economy is doing. People are just looking at the brute force of what corporations can put on. Futures up 6, Dow futures up 51, the VIX 17.26. Still looking at oil, 69.89 on Brent crude. This is Bloomberg.
This growth could be extended as we continue to deal with the push-pull of COVID.
With valuations where they are, with sentiment as stretched as it is, this is not a market that has a lot of room to absorb bad news when we do get it.
I think the market is telling you that we're closer to disinflation than inflation.
The expectation is the Fed will certainly signal a much more dovish tone.
This is a Fed that's going to take its time. It's going to measure twice and cut once.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowicz.
The race toward optimism. Who could be the biggest bull on the street? Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. John Farrow, Tom Keene, and Lisa Abramowicz. John Farrow off. Kailey Leinz very much in today ahead of her wedding, which of course we'll be congratulating her on. Honestly, Tom, it is a race toward the most optimistic view out there, and it seems like a lot of the skepticism is getting shrugged off. Any sign that the low bond yields are inconsistent with stocks? Simply not even on the table right now.
And to me, it's more granular this week, off the mat of what we had last week with some real difficult stream of news last week, and of course, the shock of no Jackson Hole, and on to where, Lisa, it's just a statement on earnings. A guest coming up in moments here is quite good on this. And Lisa, it's the purity of the move up in the last 2 days that gets my attention.
I keep having this voice in my head saying the stock market is not the economy. How long can we get a divergence if we get a slowdown?
I can't emphasize enough. You have to enjoy, Lisa, losing money 3 times in a row off of that maxim, and I really can't say enough how true that is.
Well, and that's why, Kailey, I do wonder how much emphasis there is on consumer spending and the power behind that, especially heading into September. Perhaps we did get peak Delta fears, but especially with the runoff of some of the stimulus programs, of some of the checks that people have been getting, how much is that a risk that people are citing?
Yeah, well, and that's what you have Jan Hatzius over at Goldman Sachs when he downgraded his view on U.S. GDP last week or the week before. Part of that was he thinks consumption is slowing down in the month of August due to the Delta variant. And it strikes me, Lisa, to your point about the difference between the stock market and the economy, he has that downgraded growth call at the same time that Goldman's chief equity strategist, David Kostin, was until this morning the most bullish on the street with a 4,700 price target on the S&P 500 for year end. Those things coexisting at the same time.
This is the reason why, Tom, it's so hard to understand what the Fed's going to do this Thursday and Friday at the virtual Jackson Hole Summit. The idea here that you have an economy that still needs help, you have a stock market that really does not. How do they square these two realities at a time when they're worried about wealth inequality and a disproportionate of the wealthy individuals are the ones benefiting from some of their easy money policies?
I talked to Mike McKee about this yesterday. He'll be spearheading our coverage here on Friday, and he says, you know what? It is changed. It's just not the same as sitting in the lodge and wandering out on the lawn to wave at the moose. And I think they're moose. Maybe they're elk. I can't remember. They're big. That's what I remember.
Thank you, Tom.
But Lisa, the important thing here is it's all going to hinge on the chairman's speech. And, I don't have a strong opinion on it other than I'm going to go where Belski is, Brian Belski of BMO Capital Markets, where he says taper's way overdone. Taper can actually be good for the markets. Futures up 6, Dow futures up 49, the VIX 17.29. Turkish lira in. I gotta throw an audible here, Kailey. Help me out. What are you looking at in FX? I see Euro 117.37.
Well, you know me, Tom. I come in at 2:45 a.m. Eastern Time. I was looking at the Thai baht this morning because, and this is important, there is an idea now that we are seeing peak COVID cases in Thailand. That is what was reading through to the optimism in the Asian FX session. And I wonder, too, if we're starting to have a conversation about peak COVID cases here in the U.S., what that read through will be to these markets, Tom.
And it's stronger baht. It's amazing, folks. She can mention Thai baht. And I can just bring it up because that's a Bloomberg USD THB, and there it is. Thai baht.
Power of the terminal.
Thanks for that value add, Tom. Look at that Thai baht.
Look at that Thai baht this morning. Joining us now, someone who's fluent in Thai. Sarah Malik joins us right now from Nuveen, their Chief Investment Officer. Sarah, I love your research note. It's clear, it's crisp, it's sharp. What's the single distinction in your note that's an optimistic note?
Well, we'll start with one slightly pessimistic note, which is that disagreement between the bond market and then the stock market recently, including yesterday. But really, what we think is the stock market's looking for some silver linings for 3 key reasons. One is we expect to see some good economic data this week, not only with PMIs, but in consumer confidence. Also, look at vaccination rates. They're up quite significantly in August versus July. And we think in the U.S., the Delta variant is peaking. All of that together, we think, is the positive that the stock market is now leaning into. We expect volatility around some of the Jackson Hole and back to school uncertainty around the variant. But soon the page is going to turn to 2022. High single-digit earnings growth, that's not a bear market. It's not a recession. That's the type of market that can put up strong returns, not as strong as this year and last year, but still strong positive returns going forward based on that earnings growth.
So how big of a bull, Sarah, are you?
We're pretty bullish over the medium term. Shorter term, we think there will be volatility. There could be more of a trading range, even a buying opportunity as the market adjusts to tapering. But
hold on a second. I'm sorry, Sarah, when I hear this, everyone's like, there could be volatility, which means buying opportunity. No one says there could be volatility, which brings gloom and doom and actually will threaten our returns in any meaningful way. I mean, is that a contrarian indicator that concerns you?
When we're thinking doom and gloom, this is a longer-term structural issue with the economy. You have something that we saw where there was a bubble or inflation is so high that we're going to go into a proper recession. Volatility we see coming up would be short-term. This is more like 2013. The market adjusts to tapering. You see downside of maybe 5 to 10%. It's going to be very short-term. Market timing in that kind of environment, that's a loser's game. We think that's where you need to step in and buy. You can even see with China here, we were looking at something like Las Vegas Sands just recently. It's trading back at March 2020 lows. You saw what happened last night. When we see that kind of downside, it's very quick to rebound when it's not based on long-term structural issues. And we don't think the downside that you see around the tapering will be long-term structural for the economy.
So I'm wondering what specifically would be on your shopping list in that when you look at some of the reopening trades, for example, they are already well off of the highs we saw earlier this year. And we saw a money manager over at Morgan Stanley in an interview with Bloomberg yesterday saying you need to buy those reopening trades before it's too late. Do you agree with that?
We're more interested in stocks that have a couple of things going for them. One is pricing power, because we think there is some permanence to inflation going forward. And second is you need to look at companies. We're looking at decade high margins for many companies. Who also has that pricing power to overcome the margins so they can continue to expand them or at least preserve them from here. We like small caps, actually. I heard one of the prior speakers was saying they don't like small caps. For us, they're trading back at a discount to large caps that we saw in September 2020. Looking at January this year, they're at some of the lows. They're tied to higher inflation and higher interest rates. We like industrials. We think infrastructure spending will be positive for them. And as that economic growth continues, positive for industrials.
Sarah, the heritage of Nuveen of Chicago is that of clipping coupons. I mean, what they did in municipal bonds, I was explaining this to someone last night with a beverage of my choice in my hand, that Nuveen codified the clipping of coupons. Can I clip dividend growth? I mean, is dividend growth so entrenched that Nuveen has the courage to say it's a 10 or 20-year trend?
If you look at dividend growers, that's the important thing, that they're companies that are so financially strong that they can continue to grow their dividends. They actually tend to perform well, not only in defensive markets, but in periods of higher rates, higher inflation, and in periods of volatility. That has been a great segment of the equity market for investors who are focused on income, because they have that sweet spot, the combination of not only nice yields to go along with the fundamentally strong companies that can continue to increase their dividends.
Sarah, are high-yield bonds still a leading indicator for equities?
Right now, I think what we're seeing is they're going in two different directions. We've seen that with widening credit spreads. We're also seeing that with the 10-year that is not matching the optimism of the stock market. And the question is, who will win over time? Our view is that economic data is going to be what really is the key winner to this battle. And we agree with the stock market. We think earnings growth, not valuations, will drive markets higher next year. And that high single-digit earnings growth that we expect can give us what is typically the third year of positive returns post a recession. It's usually not as strong as what you see in the first couple of years, but it still is positive. Even through a taper tantrum, if the yield curve doesn't flatten or invert, we think that'll be what remains positive for the markets and takes it higher after this period of volatility.
Sarah Malik, thank you so much. With Nuveen, the Chief Investment Officer of Global Equities. Just a very important conversation. We're trying to give you a mix today of what we see, and we do this within, Lisa, the switch or the barbell, if you will, of emotion from Thursday last week to Tuesday this week. I'm sorry, it's extraordinary.
I'm a flutter. I mean, honestly, though, in all honesty, there has been a huge shift from depression about the ongoing pandemic and the idea that the Delta variant dramatically changed that, to suddenly realizing, wait a second, maybe it'll end soon and we can go back to the assumptions that we had earlier. We're not out of the woods yet when it comes to the pandemic, though, and you do think, well, could we get another drawdown of 0.6% on the S&P 500? Woe upon us, Tom.
I don't. There we are. Kailey, coming in with an observation on the equity markets. I know you're reading Brides magazine, but get to it. Give us an observation right now.
It's under my desk, Tom. But to Lisa's point about the drawdown and the size or the lack thereof of the drawdowns we have seen, we have not seen a drawdown of 5% or more on the S&P 500 since November of 2020. We're approaching 10 months. I believe that's something like 200 trading days where we haven't seen any noteworthy declines in the equity market. And to Lisa's question, not to bring the gloom, but how long can that really be sustainable?
And can I just say, Tom, no way is Modern Brides under the table of Kailey Leinz. It's Foreign Policy magazine. Are you kidding?
I did have that earlier.
I mean, she was sitting in the chair getting her, hair and makeup done. She wasn't reading Brides magazine. She was reading Foreign Policy.
I think the basic idea here is every inch of Brides magazine or Modern Brides magazine is $20,000. I mean, I think that's the way Dad's.
I was about
weddings
to say.
aren't cheap. Nothing related to a wedding is cheap.
No. Also, the rumor, this came in, and I'm sorry, it's wrong. Zach Brown is not playing the Leinz wedding. That was a rumor that was out there.
Much to my chagrin.
Not playing the wedding this morning.
Springsteen might show up.
Oh, yeah?
We'll see. Futures up 6, Dow futures up 53. Interesting day out there. Stay with us. Julie Norman on Afghanistan. We do that next.
With the First Word News, I'm Rishka Gupta. CIA Director William Burns reportedly held a secret meeting with the leader of the Taliban. According to the Washington Post, the two met yesterday in Kabul. There's no comment from the CIA. The Post says it's likely the discussions involve the impending August 31st deadline for U.S. troops to leave Afghanistan. U.S. agencies are rushing to complete security vetting of thousands of Afghanistan citizens who are in line to be relocated to America. The chaos at the Kabul airport means some are being put on planes before their background checks are complete. Some lawmakers are pointing out there's a risk that terrorists and criminals could slip through. Vice President Kamala Harris warns that China poses a threat to countries in Asia. At the same time, she reassured countries in the region that the U.S. would not force them to choose between the world's two biggest economies. In a speech in Singapore, Harris spoke about the vision for a region built on rules, human rights, freedom of the seas, and unimpeded commerce. New York State now has a new governor. Kathy Hochul was sworn in just after midnight, becoming the first woman to serve in that role. Hochul takes over after fellow Democrat Andrew Cuomo resigned over a sex harassment scandal. She has to overcome the shadow of that scandal whilst dealing with New York's sluggish recovery and rising coronavirus rates. Shares of Best Buy are higher today. The consumer electronics chain raised its full-year sales outlook on continued strong demand for its gadgets and services. U.S. same-store sales were up 21% in the second quarter, beating estimates. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
When you have fear seep in, markets really can't climb. When you have sort of that nervousness and that shift to high quality, markets can climb that wall of worry. But it's a very delicate balance, and frankly, it didn't work for most of last week. There's, a little bit of that resilience that we will be able to turn the corner still showing up.
Lori Calvasine, RBC Capital Markets, getting out front of a great bull market. We've seen that through the day, a real theme here right now. Lisa Abramowicz and Kailey Leinz. Ms. Leinz in for John Farrow, who's off on a needed sabbatical, and we're thrilled that you're with us on radio and television this morning. Just, Lisa, very quickly on the equity markets, Dow 35,329. I don't hear too many people calling gloom on the street. It's out there, but it's not on the street, is it?
I mean, honestly, to the extent that there's gloom, there's going to be a dip, and buy it. I mean, honestly, Tom, we don't necessarily see anybody calling for some sort of major retracement at this point. And honestly, it's hard to see the argument for a huge correction, although perhaps that's a contrarian signal itself.
That's certainly the zeitgeist right now. Right now, we go to Afghanistan, and we do it in a unique way. Julie Norman is at UCL, the University College London, and is a political science professor, covers the field. But her wheelhouse is terror. In her wheelhouse is the unrest across the Middle East, from the Levant over to Afghanistan, and all the great tension of the stands. And she joins us this morning. Julie, I said a couple days to our executive producer, just get me Julie Norman now. Julie, your thoughts on the reemergence of the Taliban. Are we reemerging terror?
Well, Tom, the Taliban never completely went away, of course, and what we're seeing now is somewhat of a new reiteration of the group, but still maintaining a lot of the ways of doing things that they did in the past. They have a lot more savvy messaging now, but what we're seeing on the ground is still very similar to the group that we saw 20 years ago, where a lot of the concern right now, of course, from the terror perspective, is the real threat that Afghanistan could once again become a haven, not only for the Taliban, but also for Al-Qaeda and ISIS.
Your published expertise is an expertise of terror that has rules of the road. Think Israel, Palestine, or any of the other fractious issues of the Middle East. Does the Taliban play by the rules?
The Taliban definitely does not play by the rules. With that said, they're a different kind of group than, say, Al-Qaeda or ISIS. The Taliban is pretty locally focused. They focus pretty much on Afghanistan. They want to rule that territory in the way that they want to rule it. They are not, in the sense of Al-Qaeda or ISIS, looking to, at least up to this point, have any kind of international presence, threat, what have you. They've always been very focused on that specific territory. So the Taliban, the way we think of them as a security threat, is a little bit different in terms of what they directly would do. But again, the real worry for the U.S. from a security interest point of view is the real threat that this would become a haven for other groups that do have more nefarious external interests as well.
Well, how has the nature of the terrorist impulse changed in terms of attacks? I mean, in 2001, it was through the airlines, it was through the airports. In 2021, there's much more focus on cyber threats. With respect to the Taliban, with Al-Qaeda and some of these other cells, where is the risk?
Yeah, it's a great question. And what we've seen is actually a lot of terrorist operations have shifted away from the larger, very attention-grabbing, airline hijackings and whatnot, and tend to be much more small-scale. So the Taliban, as well as Al-Qaeda and ISIS, have for years now been carrying out these more small-scale attacks out Kabul, as most do other parts of Afghanistan, the region, that are more along the lines of car bombs, sticky bombs, sometimes, as you said, getting into more of cyber threats and whatnot, but these groups are really focusing more on just doing the most damage that they can with sometimes rather crude instruments to do that.
Julie, of course, the war in Afghanistan may be over now or at its waning days. We'll see what happens come August 31st. As for the war on terror, is that one that really can be won? Can you defeat an ideology?
Well, that is such a great question because Biden has obviously very much wanted to end this quote-unquote forever war and is trying to do that with its withdrawal of troops. But as you just said, the larger war on terror is one that is going to be continuing. We still have different operations going on in different countries, mostly being carried out by drones rather than by troops on the ground. And those operations will just by nature continue even after this troop withdrawal.
You know, I look, Julie, at the study of this, and you're just so steeled in it. The juxtaposition for me right now is well-dressed people in control. On radio, I'm doing my hands like the FedEx commercial from 20 years ago. Everybody's in control right now in Washington managing the message. The images from Afghanistan are from another world. It's not medieval, it's tribal. When are we going to figure out that fancy-dressed people managing their hands like a FedEx commercial's not going to get it done? How do we make that leap to dealing with a tribal culture?
Well, Tom, I think you said it right there, and if anyone in Washington hasn't learned that lesson yet, they're definitely learning it now, that a lot of the best-laid plans coming out of offices don't necessarily play out that well in the field, especially like Afghanistan. I mean, anyone who has worked on or in Afghanistan has been very well aware of the challenges. They were aware of the challenges when this operation started in 2001 and have been aware of the challenges ever since then. It was always going to be a very difficult mission. It became even more difficult with the addition of the Iraq War going on parallel to it. And it's a very difficult mission to extract from now. And that's partly just the nature of Afghanistan itself and partly the nature of the U.S. mission that was there. But it's certainly going to be a lot of analysis looking back at lessons learned from this.
Professor Norman, thank you so much. Greatly appreciated. Julie Norman at the UCL, University College London, Political Science Department. Lisa, that's really just extraordinary there. And it goes to what we're going to see this morning, a G7 meeting. Everything will be managed. The president will speak. It will be managed.
Yeah.
Are any of the images we're seeing managed, including the reports this morning of massive agony in Qatar where the heat is the refugees wait there?
No, it's not being managed.
Yeah.
Or the stories of a woman giving labor on a plane as she got evacuated out of Afghanistan. To me, how does the U.S. get some sort of alliance, get some sort of unity among the allies when there is so much little faith between them and there's a lack of trust that's been breached over the past 4 years, 5 years, 6 years between the United States and the allies? I'm curious to see how G7 unfolds on that.
I mean, I just don't see it within history, Kailey. You know, I just don't think Dwight Eisenhower was managing the message at the end of World War II.
Well, to Lisa's point, it is a question now of America's standing in the world, and is it going to continue to be this global hegemon, the one that allies look to police other countries, to be interventionist in other countries' affairs, or as the conversation we were having with Editor of Foreign Affairs earlier on, are we going to go back to a policy of American restraint?
Kailey and I are just channeling on radio. I'm holding up a copy of Foreign Affairs, Who Won the War on Terror. It's the new, there I go. It's a new edition here of this must-reading for anybody listening on radio. Foreign Affairs, Who Won the War on Terror. Markets pull back. It's a crisis. We move from up to up 4, up fractionally. The VIX 17.35. So much for the bull market rally. Stay with us on radio, on television. This is Bloomberg. everyone. On a Tuesday, August, sleepy summer, not. It has been absolutely extraordinary, wrapped around a pandemic that won't go away, wrapped around what we just learned from Julie Norman on Afghanistan, and, of course, the events of Washington today. One event, of course, is a resilient market. Kailey Leinz in for Jonathan Ferro, Lisa Abramowicz, of course, holding court. And Lisa, as we go to a bond guy, and I think, this is a true story, folks. I'm on the floor of Bear Stearns a million years ago, and John Riding Lisa's ready to go on. And just before we cut to live, somebody screamed out at John, price up, yield down. And of course, the whole place erupted in laughter as we went live. I mean, nobody's laughing now, are they?
No, Greg Peters is somebody who's gotten the bond market right again and again, as well as all of PGIM Fixed Income. He's head of multi-sector and strategy there. And you've been calling, Greg, for this decline in yields, or at least a stasis where we are, despite some of the inflated expectations earlier in the year for inflation. Here we are at a precipice where bulls on Wall Street cannot get bullish enough about equities, where bond veterans are looking at the bond yields here and saying they're not going to move that much. Do you think that people could be surprised by bond yields going lower being a bear case for equities?
Yeah, I think that's a distinct possibility. It's not my base case by any stretch. I actually think we're in this symbiotic relationship where low yields really allow equities to outperform, right? It's not only the discounting mechanism that's much lower, so pushing up valuations, but it's just a low, stable yield environment is just broadly supportive of growth, broadly supportive of earnings, and should be broadly supportive of risk assets. So I actually see the two actually pretty much aligned here. But I think your question ultimately is, if the bond market really starts to sense and suss out a rolling over of economic activity, then that's clearly not a great outlook for stocks.
If Jay Powell this Friday at his speech at the virtual Jackson Hole Symposium comes out and forecasts or foretells an earlier taper than the market is expecting, says November rather than December, as most people seem to expect, what's the reaction in markets?
I don't know. I mean, personally, I don't think a month matters. I mean, if the markets are that sensitive around November versus December, then I just think it's kind of looking for an excuse to take some chips off the table. So I'm not overly worried about it. That's my personal expectation, that the Fed starts to taper in November, maybe December. But either way, they're tapering. And then equally, I'm not as jammed up over a taper as some other folks, just given the fact that you're seeing this massive shrinking in Treasury supply at the same time.
Greg, part of the stresses that are out there now is historic liquidity. Every morning I look at overnight repo. We've now gone out over $1 trillion. We're grinding higher. I've got experts telling me it's no big deal. But how does the wall of money that's out there fold into the PGIM yield? How does it fold into the simple idea that we want to observe and guess where yield is going?
Yeah, I think the technical dynamics are important here. Typically, I don't think it changes the direction, but I think it exacerbates the move. And so that's why I'm focused on Treasury supply going forward, as I think the fact that you're going to see a decline in Treasury supply next year and several years after, I think is highly supportive. At the same time, the U.S. is winning by not losing, right? So the fact that you're seeing so much foreign investment into the U.S., into the bond market, is also supportive. So I think these are really supportive factors, but ultimately it does point to the fundamental piece. And so I think fundamentals are the driver. I think the technical is just exacerbated.
I don't want you to make a sell-side bracketed 10-year call, but I do. As a guy running institutional money with that belief on liquidity and on Treasury supply, bracket the 10-year yield as you see it now, a year out or 2 years out.
Yeah, so I think our level, 2 years forward is about 80 basis points on the 10-year. Our call for the end of this year was 120 basis points, so we're in striking distance.
Yeah,
that felt wonderful. Like a terrible call in the first quarter, Tom. I have to be honest with you. It was quite painful. Yeah, I did. But I think longer term, we see an environment where yield will remain low. And honestly, I struggle with the narrative that yields are going to jump post-Fed taper, post-economic activity that's off the charts, peak inflation, all those sorts of things are in the rear view. And to me, I just don't really see an environment where yields, after all that's been thrown at the market, that yields will move higher after the fact. If it doesn't happen during, then I'd be shocked to see it happen after the fact.
I know that in about 4.5 hours' time or so, Tom Keene is going to be awakening from his nap, eagerly watching the 2-year Treasury auction we're getting at 1 p.m. Eastern Time. He cannot wait, neither can Lisa. When it comes to these auctions and the supply and who is buying, how do you think about foreign buyers in the Treasury market?
Yeah, I think it's important. I mean, we've been seeing it, particularly as we get closer to taper, whether it's November or December or January, who knows? The fact that you're seeing foreign buyers increase their purchase power within the U.S. Treasury market is important, right? So I do think that's a strong technical factor. So I expect that to continue. But I try not to get overly taxed by a single auction event. But I think, over time, though, you'll continue to see the auctions do quite well. Foreign participation to be quite high, and auctions to go quite well.
And of course, the U.S. in many ways is attractive because it's still the highest yield you can get in basically sovereign bond markets globally. And even if you expect yields to be staying lower when it comes to Treasury yields, is that still going to remain true?
Yeah, I think so. It's a relative game. We play a relative game. So we're looking at where yields are in Europe. We look at where yields are in Japan. And the U.S. By far has the most attractive yield environment. So I don't see that changing anytime soon. I don't think anyone is forecasting European yields to move above zero anywhere over the near term or ever. I really think the support for U.S. Treasuries, U.S. assets, period, will continue to be quite strong, which is why I think the dollar will continue to do quite well here. Which is somewhat against consensus, or was against consensus.
Greg, before we let you go, I want to ask a philosophical question. As we talk about the Fed and their ongoing $120 billion of asset purchases every month at a time of rising inequality, at a time of inflated asset prices, at a time when a lot of people are saying that corporate profits are as good as they're ever going to get and will continue to accelerate from here because of their dominance over specific sectors. Is this bond purchasing program more helpful than it is harmful at this point?
That's a great question. Clearly, inequality is something that has worsened, during the pandemic, post-pandemic, right? You're creating the wealth effect. Central bank policy is a blunt instrument. This whole portfolio channel effect, whereby raising asset prices to increase kind of spending at all to trickle down, hasn't really worked that well. So I think the Fed's focus will continue to be around getting real wages higher. So for me, the focus is less on asset prices, but getting real wages higher. And I think that's the most important piece of the puzzle here to solve, not only in the U.S., but globally, as inequality has really worsened quite dramatically here over the past 12 to 18 months.
Gregory Peters, thank you so much, with PGIM, head of a multi-sector strategy there. Really interesting conversation. Optimism there on price sustaining, price up, and yield. Maybe not lower, but nevertheless yield contained, I should say. Lisa, I've really got to take notice here. And of course, we have an intern in the control room. All they do is keep track of the great questions. Lisa, do you realize that Kailey Leinz has 2 great questions today?
I think she's got more than 2.
I don't think Pharaoh's ever done that.
Do you really keep track of this, Tom?
No, we have an intern.
It's on your personal payroll to keep track of these questions.
Intern, that keeps track of this.
I will say,
it's a paid intern. I want to point
I will say,
I get a 6-pack of Jenny.
On a more serious note, and Kailey, it is hard to ask questions at a time when there seems to be such an incredible consensus. When you actually challenge the consensus that is bullish on many counts and does not see any kind of contrarian indicators to this flow in terms of a big drawdown, save for Pharaoh's meditations, you do wonder, how do you even question it? Do you continue to, or are you just going to be accused of being gloomy and doomy? I'm just saying, theoretically.
It does. It seems like everyone is singing the same tune, and if you aren't, you just sound off key, Lisa. But there are still, I mean, we've been talking about how bullish everyone is being. We should note that there are still bears out there. I'm still looking at Bank of America with a year-end target on the S&P 500 at 3,800. We are approaching 4,500 now. We could very well, hit it within the coming days, judging from the price action we've seen over the last 2 days. Where does that 700 points of difference come from, Tom?
Yeah. These are huge moves. And Lisa, I'll take it back to real yield. I would say, Lisa, within the literature, people are looking at the real yield negative 1.03 and saying, what's the impact on our financial and frankly non-financial lives if the real yield goes to, you pick it, negative 0.50?
Well,
do we have a clue?
A lot of people think that it will be very significant because there is a belief that Fed yields are pinned to some extent by Fed participation, by the wealth effect, by the overseas buying. If there is a question about that, though, how much does that rejigger the entire landscape? We're going to speak coming up with someone who is definitely not a bear, Federated Hermes CIO and Global Liquidity Markets, Deborah Cunningham, who perhaps can talk about some of the consequences of having some of these negative yields, at least on a real basis, and the effect on money markets, Tom.
Absolutely. Thank the intern, killing it. Last Pharaoh, great question. April of 2017. Thank you. That's news we can use. This is Bloomberg. Good morning.
With the first word news, I'm Rishka Gupta. The British admit it's a long shot, but today they and the leaders of the other G7 nations will try to talk President Biden into leaving U.S. troops in Afghanistan after the August 31st deadline to keep evacuation safe. UK Defense Secretary Ben Wallace told Sky News the problem is the security risks go up as the deadline grows nearer. House Speaker Nancy Pelosi and a group of moderate Democrats resumed talks today on how to advance President Biden's agenda. Hours of negotiations yesterday failed to break a stalemate. Pelosi wants to hold off passing a $550 billion infrastructure bill until a much larger package worth as much as $3.5 trillion is ready for consideration. At least 10 Democrats say they want a vote on the infrastructure bill now. A special House committee investigating the Capitol riot is seeking phone, text, and other communication records, including some from members of Congress. The panel won't say whose records are being sought, other than it involves hundreds of people. Republicans have denounced the investigation as politically driven. And the stage is set for a potential power shift in Europe's biggest economy. For the first time in 15 years, the Social Democrats have overtaken Chancellor Angela Merkel's Conservative bloc in a poll for next month's election. The poll shows the SPD with 23 to 22 lead over the Merkel alliance. The Greens are at an 18%. Bloomberg subscribers can follow our election coverage now on Live Go with a discussion with SCU leader and Bavarian Premier Marcus Soda. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We look for a range of about 125 to 150 for the summer, once the debt ceiling is hopefully resolved in the early fall and the Fed announces taper. We think those factors can take us higher, but gradually higher. We think we can get to 170 and above later this year.
Sahid Lada, BNP Paribas, head of G10 rate strategy. We just mentioned the bullish tone that we're seeing from so many. One D. Cass down in Florida takes issue out on Twitter. Doug, thanks for listening and watching this morning. He says, they're wrong, they're wrong, they're wrong. We digress. We each have our story of Apple. I've got too many of them to waste your time with right now. But Kailey and I go to Barry Ritholtz for one story on Apple on this anniversary of Steve Jobs' walking away from his company, walking away grievously ill. Barry, what's your best Apple story?
Oh, God. So I was a big Mac fan for a long time, and I got an early look at this newfangled iPod, not iPhone, iPod. And hey, this is the new Sony Walkman. At the time, I want to say Apple was $13, $15 with $13 in cash. So you were risking $2. My whole firm bought a ton of it. I held on to it and made fun of the guys who sold it when it was up $5. I sold it, it was a triple. And I'm like, look, I tripled my money, and then it just never looked back. And the lesson is, you know, the trend is your friend. When something is working out, don't take the money off the table too soon.
Barry, in the CFA curricula of 3 exams, there's nothing on taste, there's nothing on aesthetic, which is what Steve Jobs led with. Describe how alone the Jobs' success is, or does taste and aesthetic matter in securities research?
So it does, but keep in mind, as much as everybody focuses on Steve Jobs, he's not the guy who wrote the software. He's not the guy who came up with a lot of the design like Johnny Ives did. He's not the guy who took care of all the logistics. That was some kid named Tim Cook. This was a massively successful company with rock stars everywhere you look. And the hyper focus on Steve Jobs, well, it was good and it was fun, but it really kind of hid the brilliance beneath the top. And I recall writing a column, I think it was like 03 or 04. Wall Street still doesn't understand Apple. And here it is, almost 20 years later, Wall Street still doesn't understand Apple. Think back 20 years ago when the Apple stores were introduced. That was the 20-year anniversary earlier this year. I love the articles that said, this is guaranteed to fail. It's the dumbest idea in business. The most successful retail outlet in the world are the Apple stores.
Well, and of course, Barry, Steve Jobs at the end of the day was a product guy, delivering on the tangible product. And Apple increasingly, I mean, yes, the iPhone is still its biggest driver, but it is also becoming a services company. And that is where a lot of the growth for the company is. Do you have to therefore think about it in a different way?
Yeah, so you have to think about them in terms of the entire ecosystem. So I'm talking to you on a Mac. I'm looking at my iMac. I have my iPhone. I'm not a big fan of the iBuds. They don't fit my ear well, but I do have their Beats wireless, which Apple also owns. But think about, the App Store. If that was a standalone company, it would be bigger than 80-something% of the S&P 500. It's giant. So they have music, they have television, they are end to end, and I just continue to be shocked. The biggest American publicly traded company still seems to be misunderstood by analysts. It's amazing.
Barry,
underestimated.
You've done this in your book and in your writings over the years. I've enjoyed 3, 4, 5 buys where I sold and should have held. What is the mental framework to not sell?
So when you're younger and a little broker, you start looking at trades that are working out. Hey, if I sell this here, I could buy a new car. And if this goes a little further, well, that's a down payment of a house. And that sort of mixing the real world to your investment portfolios, thinking about what it means in the real world, that's a problem that a lot of young investors run into. That's very different. I've told the story many times that mid to late 90s, I have vivid recollections of investors who had ridden through the 70s and enjoyed the 80s and 90s saying, I'm going to take a little bit off the table from my portfolio and I'm going to buy that vacation property. I'm going to do. That's very different when you're rotating from one asset to another than starting to think about your individual holdings. And P.S., the crypto bros love to do this with Lambos. Hey, 40,000 on Bitcoin, I'm getting a Lambo. Well, now it's 50,000. And the question becomes, is this a trading vehicle or is this something that you're using to change your lifestyle, to jump on that hedonic treadmill?
Yeah.
Not the best idea.
Barry, if you're looking to take risk off the table, what would be your reason for doing so? What is the biggest risk that you see?
Well, historically, investor behavior is always the biggest risk. Time and time again, that demonstrates itself. I've written starting in July, and I think the street has kind of moved in this direction, that the anti-vaxxers and having 30% of the American population who is eligible for a vaccine refusing to take one potentially puts us at risk for an echo of 2020. Not a full lockdown, but an ongoing drag. I think the FDA approval yesterday might help that situation a little bit. And we've also seen corporate America's leadership step up. I'm not a big New York Post reader, but there's a very amusing story I tweeted out this morning about Wall Street mocking the anti-vaxxers, anti-logic, anti-rationality, anti-science members of their own. If you work on Wall Street and you're not vaccinated, expect to be humiliated and not be invited back to the office.
Barry Ritholtz, thank you so much. We greatly appreciate it. It's time now for a Bloomberg surveillance moment of silence. We do that for Mr. and Mrs. Leinz. Rumor is they will survive the weekend as well. How are your parents holding up? Cut to the chase.
Everybody's doing great, Tom. The countdown is on. We're so excited, so ready.
Please. I didn't ask about
no
you.
Logistics to take care of whatsoever.
I asked about your parents.
They're doing good. Martina and Andy, I bet they're listening right now.
And there was deep planning into this. Was this put together in 30 days, or has this been one of these 6-year extravaganzas?
1 year in the making, Tom, which I would like to think is a pretty short time in wedding terms.
Are you doing the grand tour of Europe? Is this the basic idea where you're gone for 3 months and we see you?
No, I'll be back next Wednesday. I can't stay away for too long.
That's like another romantic wedding here at Blue. When are you coming back? Let me see. That's very funny. Well, very good. Kailey, thank you so much for your support here of Bloomberg Surveillance with Farrow Away. And we wish you, I don't know what we wish her. My thoughts to your parents more than anything.
Yes. Yeah.
It'll be fun. And folks, this was a rumor that got out on Twitter. Zach Brown is not playing the Leinz wedding. Kailey, best of good fortune. Coming up here, Balance of Power. It's an eventful day in Washington. This morning, the president, I believe, scheduled to speak. And, of course, that G7 meeting. Balance of Power at the 12 noon hour. This is Bloomberg.